Ovniver Group for 815 million US dollars. And we're also watching Applied Materials on the chip read across. Anna.
Okay, yeah, absolutely. So the read across from US commentary around the chip sector will certainly keep that in focus. So European equity markets then opening up this morning. The FTSE is pretty flat straight out of the gate. Everything else still closed. We'll be looking for, we might see some catch up on the Italian market. That's not in here, but it was closed yesterday. So we'll be looking for that to play a role because it missed out on the rally of yesterday. So that's something to bear in mind when we're assessing just how risk on we are here in the European session. So some modest gains coming through. The IBEX up by 0.2%, waiting for the CAC and the DAX to open up. There's the CAC 40 up by 0.25%, and we see Stock 600 up by 0.3%. It's a pretty quiet day, though, Tom, when it comes to individual earnings stories, or very quiet on the earnings front. Pretty quiet on the earnings news flow, on the corporate news flow front as well. So it does seem as if we're still in the hands of the macro, and the macro has really been about that US retail sales picture over the last 24 hours.
Yeah, this is a data-driven market for now, it seems. And as you said at the top of the show, in the last hour, the good news on the data front seems to be feeding into good news for these markets in terms of risk on equities and the selling pressure coming through for treasuries. Across the UK space, then, you're absolutely right. The FTSE 100 is flat. Part of that is down to the softness in the commodity markets, and that seems to be weighing on the FTSE 100. The CAC going over in France, then, a brighter picture there. Gains of 0.3%. And over in Italy, look at that. Gains of 2%. The upside coming through from the FTSE MIB. On a sector-by-sector basis, Anna, just two sectors very marginally in negative territory, construction and telecoms, but not by very much. At the top of the list, autos getting a lift, up 1.2%. Travel and leisure also in positive territory, alongside banks gaining 0.6%. Every sector in positive territory, apart from telecoms and healthcare, and by only a slim margin. On some of the individual movers, then, we've been keeping an eye on the likes of Saint-Gobain over in France on a deal making, but also on Bayer as well. On the top side, coming through, ST Micro, interestingly, in the chip space, gaining 3.5%. You've also got some of those Italian banks performing very well. Banca Monte dei Paschi di Siena, I believe one of the oldest banks in the world, up 3.5%. On the downside, you've got a bit of pressure coming through for the likes of Ferrovial and Hiscox in the insurance space here in the UK, down 1.3%, Anna.
So that's the picture on some of the sector drivers. I mean, Tom, we've been through a few of those stocks on the move this morning. I'm just looking at what's gaining the most points on the Stock 600 right now. I see UniCredit is one of those big gainers, and Intesa Sanpaolo is in there as well. So when you have the Italian market out for a day and then it comes back, and it missed a day where banks did okay, and there was upside and risk on, well, that's what's going to happen. So we see some of those names moving higher. ASML actually not moving much by in percent terms, up by 0.6%, but adding the most to the Stock 600 right now. And we have an opening price on Bayer.
Bayer performing very well, up 3.8%. Close to 4% is the pop coming through from Bayer, again, on the back of this victory in its long-running legal case. It's not over yet, but it's scored what is seen as a significant victory in terms of that legal case around its Roundup weed killer, which, of course, has faced allegations of being linked to cancer, but that's been a ruling in the US in favor of Bayer, and you're seeing the investor reaction to that, now up almost 5% on that German-listed company. Saint-Gobain over in France getting 0.6% on a potential takeover story, and again, in terms of the read across in the semiconductor space, less of an input, really, arguably, given the outlook coming through from Applied Materials. It wasn't terrible for Applied Materials at all. They do see AI being a driver, but it's a reminder that investors want to see gangbusters forecasts for some of these chip makers. This is an equipment maker, of course.
Yeah, let us move on to another conversation and bring in our guest, Nanette Heschler-Federb, who's CIO for EMEA and Head of Investment Strategy, Sustainability and Research at the Swiss private bank Lombard Odier. Nanette, very nice to have you with us once again. Thank you for joining us this Friday morning. So the broad picture for stocks has looked pretty positive this week. We finished the week with the European stocks going higher. US futures look more positive. Talk to us about what you're seeing in the driving seat as we go into a week where we're going to hear from Jackson Hole. There's the potential for new messaging around the Fed.
Yes, I think we are set for some tailwinds for markets. Goldilocks is a good summary. Essentially, the real economy data that were recently out showed a resilient consumer in the United States. And then we are still in this big picture of normalizing inflation, which should put central banks in a very good position to cut rates, the Fed being one of the last to join the group of other central banks that already started. So So I think Jackson Hole and the general topic around the effectiveness of monetary policy transmission is going to just nurture those tailwinds. I guess in terms of the next data point that will be important for markets, it's the August labor market report. So that's still a bit way ahead. And as far as the non-economic data are concerned, which are also, at least in the short run, potential drivers, we are certainly still having to keep a good eye on geopolitical developments.
Okay, so all of that in focus. Yeah, the labour market report at the beginning of September, that's now going to get a lot of attention. And we seem to be hearing from Fed officials, Nanette, that they're increasingly focused on the labour market as opposed to inflation, and they, unlike many other central banks, have that dual mandate. Is that going to be part of the conversation at Jackson Hole then, as you point out, that the overall topic is reassessing effectiveness and transmission of monetary policy? And there's been a lot of focus on the way that maybe transmission has changed post-COVID, and the labour market could play a role there. What is your focus on the labour market?
Yes, I think for the United States, this dual mandate is really setting the priorities. When inflation is less of a priority, and I'm always looking at the break-even inflation rates as a good gauge of how the Fed is going to shift priorities. When we are close to 2%, it's a good time for the U.S. Fed then to take the other side of its dual mandate, especially when there were signs of weakness, and that is the labor market, the real economy. So I think we are exactly at this inflection point where there is a shift of priorities. If indeed the labor market continues to show this weakness. As far as the transmission is concerned post-COVID, I have to say that there is more noise. It's been much more difficult for central banks to predict inflation because of also policy intervention. Governments and economic policy that is making choices is having an incidence on inflation forecasting. And certainly from our point of view, this is the new thing after COVID.
Okay, so on the complexities of monitoring and getting a gauge on inflation. Nanette, good morning. The markets are pricing in one cut from the Federal Reserve every meeting until May of next year. Does that seem reasonable to you?
Yes, I think we are certainly before the end of the year going to see a cut at every meeting. And then as far as next year is concerned, the market will still have to make up its mind in dependency of the US elections results as well. The two possibilities, the two scenarios might very well have incidences on inflation and inflation volatility. Therefore, I'm not so sure about the forecasts that go or the expectations that go beyond into 2025. I think there is still room for adjustment.
Interesting. I wonder how complicated you think the system is, or at least the situation is for the Bank of England here. So the data coming through for the UK showing that there's resilience in terms of the health picture here, in terms of the economy. We heard from Hugh Gimber yesterday, JP Morgan, saying he actually would lean in to UK assets in this environment, both gilts and equities. Would you align with that view?
Certainly on the equity side, we would align with that. We think the equity market in the UK has been one of the laggards internationally. It has a defensive quality as well. I mean, we were talking about now markets all again in a sunny mood, but when there is volatility, the UK market is holding up better than the rest. It has lower volatility, and what is also quite attractive about it is that the dividend yield is higher than other European markets for sure. So altogether, if we take a look then at the sector exposures as well for risk incidences, we talked about geopolitical risks, then this is a market that is looking very attractive to us indeed.
Okay, so that's the attractiveness of some UK assets, Nanette. What do you make of the macro backdrop in the UK right now? Because some of the data has been coming in better than, well, actually it was in line with expectations, the growth data yesterday, but quite buoyant versus recent history in the UK. There seem to be some economists a bit nervous about whether we might see an overheating of the UK economy in the second half of the year, and that seems oddly timed with rate cutting from the Bank of England. How would you expect that to square up?
I still take a step back and look at 2024 as a whole. And when I see growth in real terms in the UK hovering around 1.2%, I'm really not in the camp of overheating at all. I think that it is one of these instances where the central banks will and the Bank of England will have further room to cut interest rates if inflation continues on its path. We had confirmation of that. And in general, yes, when rates are coming down, this is providing support to the economy, but we are starting from a low level here.
Nanette, can European equities gain significantly in the months ahead towards the end of this year? What is the prospect for further upside for European stocks?
You know, European stocks for us have not been among the most preferred regions. We think that there are some headwinds. Yes, certain companies will do very well in certain sectors. We see interesting investment themes, for example, that would be very supportive for selected companies. But for the region overall, we are underweight European stocks. We think that not only is the macro picture a weak one, but many of these economies have a very strong industrial base. And as we all know, the industry has been the weak spot internationally, not only in the United States, but also when taking a look towards China and the role it is playing for the global manufacturing sector. So altogether, it's not yet, in our view, the time to have for the region overall a more positive view, I'm afraid.
Nanette, how do you look through the volatility that geopolitics and in particular the Middle East story could provide if we did see a substantial, wider escalation of hostilities there? How are you managing to look through that or factor that into your portfolio in some way?
Yes, for now, one of the decisions that we have taken at Lombard Odier is to keep our allocations really close to strategic levels. In other words, to what the asset mixes are for the various risk profiles that we want to follow, and not take very big deviations versus these strategic allocations, just for the reason that at the moment the market is not pricing very much geopolitical risk. You can take a look at the VIX, it has normalized again. Then you can take a look at US Treasury yield levels. There is nowhere really any form of risk price, and especially also not in oil prices. So we don't want to have too much active exposure at this moment. This may very well change then as market conditions continue. That's a way to look through. And then in terms of just simply assessing risks and making sure that in the allocation we have in some sense the airbags, the strategy airbags that would do very well when there is a spike of risk aversion. We are positive on gold, for example. That is one of the safe haven assets that we like. And we have certainly also some exposure to the energy sector.
Okay, Nanette Eckler-Ferderbe, CIO for EMEA at Lombard Odier, on a constructive view around UK equities, the defensive nature there, the valuation call as well, and maybe leaning into a bit of gold. Not so positive on European equities, some caution there. Let's check in on the core six in terms of some of the big cap stocks that we focus in on a daily basis. Ferrari is the standout right now, hitting a record high in terms of the stock price at 418, gaining 3% so far. There's been a surge, it seems, in call options around this stock. So Ferrari is the standout. ASML posting gains of around, 0.4%. You saw a forecast coming through from Applied Materials. Applied Materials actually moved lower after that, but top line, Applied Materials results were actually not too bad. ASML up 0.3% as things stand. Novo Nordisk, though, on the downside, down 0.2%. LVMH in the luxury space up 0.4%. But again, it all really comes back to Ferrari as the standout so far. And we'll try and unpick that story for you. But again, reaching a record high right now of 419 euros per share for Ferrari. Let's get a check on some of the other individual stocks on the move. Joe Easton standing by. Joe.
So we got some volatile trading in Bayer at the moment. It's actually in and out of a trading hole over in Germany. We've got this news, of course, around the Roundup weed killer cases potentially setting up dismissal of a number of those claims. And the stock up 8.2%. That's actually the biggest gain in 3 years for Bayer today. Really positively taken by investors this morning for that stock. We've also brought up GSK because the company did actually get a favourable ruling in Florida around Zantac, the acid medicine that they've had lawsuits on as well. So this was kind of our court rulings board, but that potentially priced in at the moment. So GSK not actually moving that much at the moment. The other health stock to keep an eye on is Bavarian Nordic, the maker of the Mpox vaccine. Now reports overnight of the first case of the variant in Africa seen in Sweden. However, pretty much the commentary at the moment is that there is not a huge risk of it spreading, but nonetheless that stock's still gaining. Bavarian Nordic saying that they can provide millions of these vaccines for Mpox over the next couple of years. Obviously very difficult in terms of the safety on that one, but that is boosting that stock. And there's Saint-Gobain also. We've got that news of that deal over in Latin America doing another bit of M&A. They've already done a swathe of deals across the world recently. A little bit of a gain, up 0.2% today. In terms of earnings, we're finally getting through the bulk of earnings. We're glad to see the back of them. But here's Nibe Industries. Now, this one, it's a heating company over in Sweden, also listed in a couple of other Scandi markets. Really strong numbers out of them, up 10%. The best performer we've got. And going the other way is Kingspan in Ireland, seeing a big decline in some of their volumes. It's a construction supplier, Irish construction supplier, down 3% at the moment. Then something a bit more up my street, it's Campari. We've got Aperol Spritz, HSBC analysts. They seem to like an Aperol Spritz over there because they're recommending buying shares of Campari today. That's out of a bit of a sell-off recently, so potentially a bit of value now seen in the drinks maker in Italy, up 3% there. Now, this one caught my eye as well. Now, Citi saying that they recommend it selling shares of H&M and buying Inditex, the owner of Zara, because the pricing points at Zara are a bit better in terms of maintaining margins. So we're keeping an eye on H&M, only a small gain in that one today, but Inditex also worth an eye. Keep an eye on that note. It's on the terminal. Have a read of that one today.
Okay, Joe, thank you very much. Joe is only joking. He lives for earnings season. Just can't get enough of it. And maybe the Campari, although I can't speak on that front. Let's move on and tell you what's coming up on the programme. Coming up, Swedish buy now, pay later firm Klarna is pushing into retail banking as the firm prepares for an IPO in the United States. More from Tom's interview with the Klarna CEO next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
People really appreciate mostly about Klarna is that 2 years ago, this business was, very much attractive, growing fast in the US, but also loss-making. And in just 2 years, we have increased revenue by 50%, we have increased gross profit by 100%, and we reduced cost in 30%, which means that now we are, profitable. And I think those kind of financial performance obviously do raise the eyebrows a little bit with investors. Also, as we have, due to AI, committed to continue shrinking the company. We've already gone from 4,500 to 3,500 in the last year, and we are committed to continuing on that path, not by layoffs, but simply by natural attrition rates.
You've been an early mover on Gen AI. You reached out to Sam Altman of ChatGPT, OpenAI, pretty early on in all of this. What's been one of the most surprising things that stood out to you as you've embedded some of this Gen AI across the business?
Yeah, I think that it is, to me, in a way, I would actually partially say that, like, I was even, kind of pulled into the hype a year ago, where a little bit like, again, self-driving cars, we used to read about them in the press every day, and then you would look out the window and like, where are they? Where are they? It's not happening. And now it's actually happening. And I think that, like, to some degree, I was almost like drawn into the hype a year ago as well. I was like, okay, in the year, the whole thing will already have like totally dramatically changed everything. And now you almost have the opposite. You hear people like, oh, we tried, it didn't give us the results and so forth. But internally, what I'm seeing in Klarna is that it is working. It's just, it will take a little bit further time before it will have the full implications. To us, we've already had delivered some fantastic results, but we're super excited what's coming in the next 12 months.
Before we let you go, Sebastian, look, what do we win you back? You're going to list in the US. That's the suggestion. That's the expectation. What does Europe and the UK need to do? Is there anything they could do to win this listing?
Well, one thing that I have said to regulators in the Europe, because there's been so much discussion in Brussels as well, how do we create a competitive market? And I have suggested, and I actually got some positive from some of the foreign ministers. I was invited by all the finance ministers of EU. Is that I think that if Europe will never agree on like where should the big stock market be? Is it Paris? Is it Frankfurt? Is it whatever European country? So the only way to actually get this to work is if you would mandate all the stock exchanges in Europe so that any stock that gets listed in one is automatically traded in another. I think that could reach the critical mass to create an investor base that is, similar size to the one we see in the US, because that's really one of the biggest challenges when you make those comparisons. If a company like ours is already mostly US business from revenue size, it will have to be a similar size of investment base and stock market size to make it a relevant listing point.
Okay, Klarna's CEO and co-founder speaking to me a little earlier on Daybreak Europe, also saying he's seeing, Anna, strength in terms of the demand out of the US in terms of the consumer there. They have partnerships with a number of big retailers, including Walmart, which also posted its own earnings and outlook as well. But they're seeing strength in terms of the US consumer still buying.
Okay, so that takes us on to our next conversation then nicely, Tom. Walmart shares jumped after the company boosted sales guidance for the full year and reported adjusted earnings that beat estimates. The US retail giant also raised its targets for operating income and profit. Joining us now to discuss Bloomberg's consumer goods reporter, Dasha Afansieva. Dasha, good morning. So what stood out to you in this earnings report from Walmart?
So they said that most of the growth came from upper income buyers, which I thought was interesting because, as we know, companies like Nestle and Pepsi have complained particularly about the state of the US consumer on the lower end. So Walmart's response to this has been drawing in the higher income consumers. The other thing that bucked the trend was China, thanks to their Sam's Club membership format. They actually grew sales double digits over there. So that also bucks this trend of the slowing consumer in China. And finally, their health and wellness business grew well due to GLP-1 drugs. And they said that they're actually not seeing any weakness in that bit at all. So it's a very different tone to what we've been seeing from retailers and consumer goods companies over in the States.
Yeah, to that point, Dasha, we've heard complaints from the likes of Pepsi, executives at Nestle cautioning about the state of the US consumer. We know about the Starbucks story as well, and the pullback there on splashing out on $6 cappuccinos. But it's a different picture for Walmart. What are they getting right? What are they doing differently?
A very different picture. I mean, to actually be able to grow operating profit more than sales at such a time is quite a feat. Especially when they're saying that they are lowering prices on lots of products because they are having to cater to a very stretched consumer after many quarters of high inflation, high interest rates, and similarly they're also recognizing a higher income consumer that they also say they're catering to by focusing on convenience and product assortment. Another thing that it seems like they're doing well is their private label. It continues to grow, and of course that's kind of an opportunity for supermarkets as people trade down. And e-commerce, another huge source of growth, is growing more than 20%, and that's a massive pillar of their strategy. Something that I also spotted, which I think might make Walmart ahead of others, is what they said on AI. So a lot of consumer companies are talking about how this is a game changer and how they're doing lots of stuff, but they're not really quantifying what it is that they're doing. And in this release, Walmart said that they found 850 million pieces of data that's either been created or improved through AI. And that's helping them predict what consumers are going to want and reduce inventories and reduce costs.
Dasha, thank you very much. Really interesting, those positive comments on AI. We just heard from Klarna sort of talking about how it maybe doesn't always deliver. Dasha, thank you. Dasha Afansieva joining us there from the Bloomberg News team. Coming up, UK retail sales bounced back in July as rising real wages and lower inflation lifted confidence. We will discuss all of that. That's coming up next. Still working through some of that inflation data of years past, a more normal situation now. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is the opening trade. We are 30 minutes into today's session, and it is risk on broadly across these markets. You're seeing gains of between 0.2 and 0.3%. The data out of the US certainly supportive in terms of the drop down in jobless claims and the increase in retail sales, and of course inflation early in the week coming in slightly cooler than estimated, all seeming to align for a soft landing scenario. At least that is the take from many. The data also crossing, of course, out of the UK. We had retail sales here bouncing back in the month of July, thanks to sunnier weather. Yes, we did have some, and that helped to increase spending in department stores, and of course rising real wages here in the UK has lifted confidence as well, at least in the margins for the UK consumer. You have the sporting effect as well with the Euros and of course the Olympics. Let's bring in Karen Johnson right now, head of retail at Barclays. So it seems like the consumer here is showing at least some signs of resilience, but you lift the hood, there's some intriguing developments in terms of changing spending habits. Karen, talk to us about what you're seeing in terms of the retail space. What stands out to you right now in terms of the health or not of this UK consumer?
Yeah, morning, Tom. We've seen some really interesting trends coming through, but the first of all is that there's no denying the fact that the unseasonable weather has had a real significant impact on consumer spending behaviour. We've seen a lot of deferral of spending until the weather improves. Our research indicated that 2 out of 5 consumers said they would defer their spending until the sun started to shine, and that is exactly what you've seen. And it's great to see that the sunnier weather means people are returning to the high streets and spending. Underneath that, there are 3 key trends that we're seeing. The first one is the cost-conscious consumer, really being thoughtful about their spending. The second one is we're seeing people spending and choosing to spend on experiences over material possessions. And thirdly is the fact that 45% of consumers are still looking at ways to reduce their discretionary spending to ensure that they can support their household bills. Coming through that's had an impact on some purchases like clothing, which are down. Again, you don't go out and buy your shorts and your flip-flops if it's wet outside, but hopefully we'll see that coming through, and we're starting to see that emerging, and also as people are going on their holidays. And the rising star of in terms of retail spending is health and beauty, which has continued to rise month on month as people invest in their health and well-being.
Okay, interesting. So health and beauty and the experiences versus necessarily going out and buying hard goods and maybe clothing items, at least for now. Karen, to what extent is this being funded? To what extent are the consumers here in the UK having to dip further into savings or indeed the credit card to kind of fund this spend right now?
Well, that's the interesting point, Tom, is that we aren't seeing those savings levels reducing, and credit card volumes in terms of the people paying off their credit card is actually on an improving trend, indicating that people are managing and living within their means. At the moment, we've seen that as a real positive trend. Obviously, is also impacted by interest rates. people sort of less, more reluctant to borrow, but equally those people in these, especially in the older demographic, who are continuing to save and are making good returns on their investments.
Karen, in another dynamic, in another part of the retail space, you talk in your notes ahead of our conversation about digital content and the amount of money people are willing to pay for that. To the extent that you talk about streamflation, this is an area of the economy where, and we know the Bank of England focuses on services more broadly, but this in particular is an area where we haven't seen those inflation rates maybe normalise.
Yeah, I mean, there's quite a bit going on underneath the surface of that. If you look back a couple of years when there was probably only really Netflix came on, they came on with some really strong opening, costs. Was it $10.99 a month or something like that? Since then, we've seen significant competition coming into the market. And now most households are having perhaps 2 to 4 different streaming services. They can access all the different material that's out there, and that's leading to an increase in the costs of streaming, per household. And obviously, the cost of actually producing the content is also giving rise to an increase in the costs of those services. Most households have seen a significant increase in that, and with the sporting events coming through again, there's a renewed focus again in terms of ensuring that they have access to watch the Premier League football or whatever their preference is in that household.
Yes, and what can you tell us from your data and your research about the economic confidence that people in Britain have right now? It was interesting at the last Bank of England's press conference, listening to expectations in the wider population about inflation, and they're not entirely back to normal levels. They haven't come back down. But what about prospects for the economy as a whole? What are you seeing?
That's actually one of the most positive aspects that came out of our most recent consumer confidence survey. Back in April, 25% of people had confidence in the UK economy improving. By July, that's increased 32%. That's the highest since 2021, which is a real positive. And if we can see that trend increasing month on month, there's people having more confidence in that interest rates are coming, will start to come down, that inflation is under control. They will start to see that hopefully coming through in terms of confidence in their discretionary spending that's available once they've paid their household bills, and that will then hopefully lead to a rise in consumer spending, which will benefit the UK economy.
Okay, Karen, so that's interesting. So in terms of the lower rate environment, so we've had one cut so far from the Bank of England. Expectations are that they won't go again in September, but maybe they go in November. How closely aligned is that mood, that sentiment? How sensitive is the UK consumer to a move lower in rates?
Unfortunately, I think with the events that have been going on more broadly in the last couple of weeks, the media sort of coverage of the fact that mortgage rates have started to come down has probably not been as high as many people would have liked to see. But I think as that rate expectation is going to come down for a further cut, and we start to see mortgage rates start to reduce, this will not have an immediate impact on funding and spending availability, but the confidence that when they come to renew their mortgages, those that have still got fixed rate mortgages due to expire will know that actually the quantum that's going to be is less than it would have been 3 months ago, and that's got to come through. But it will take time to really be felt by the man on the street in terms of what's available at the end of the month. It will also take time to come through in terms of those people who are in the rental situation, because obviously the landlords who have got commercial mortgages have refinanced. The costs will take time to come through to benefit them as well. But hopefully the fact that they are on a downward trend will give people the confidence that they're not going to go up, so they don't have to put further funds aside to look for that rainy day that may come. Hopefully won't now.
Karen, is there any part of your data set that gives us any clues as to whether we might see some overheating possibly in the UK economy in the second half of the year? Bloomberg Economics has been writing about this possibility after the data on growth that came out yesterday. Of course, we've got the Bank of England looks set to cut interest rates, which wouldn't be what you'd do if you thought you were going to see overheating. But is there anything in your data set that suggests in any sense that people are spending a bit too much?
No, quite simply, we haven't seen that coming through at all. I really wish I could say we're seeing that coming through, but at the moment, spending is at best flat. And we really want to see that coming through. It's lower than the inflation rate in terms of the growth in spending. So until the growth in spending comes through at a higher level than inflation, that's perhaps the only time to start thinking about that.
Okay, Karen, thank you very much. Thanks for joining us. Karen Johnson, Head of Retail at Barclays. And Tom, it certainly has been a busy week when it comes to the UK data picture. We started off the week with some data that actually moved the pound, and not all of the data this week has done that, but it actually sent the pound a little stronger at the start of the week, and that was around the jobs market. Some of this data is a little bit broken, though, isn't it? Or at least not to be relied upon as much as you would like. The unemployment number, it's difficult to get people to answer the surveys.
Do you think it's fair to say it's a slightly harder call to get a clear steer on the UK economy versus the US? Because of the mix that's coming through. When you look at the employment surveys, for example, and the wage growth that remains above 5% but has cooled, but the unemployment rate coming a little lower, CPI, so inflation above the target for the BOE, so above that 2% target, coming in at 2.2%, but below the estimates. It starts with a 2 handle. Yeah, we were double digits.
Given where we've been, it's just kind of incredible to think that we're now quibbling over.
And the fact that you and Edwards are talking about an overheating UK economy.
Well, I'm just channeling Bloomberg economics.
It's your big summer spend.
It's as if Dan Hansen is here in the room with us. He puts in the effort, and I just ask the easy question.
I mean, when you put it in the context of the fact this is the strongest growth we've seen, this is the kind of growth level you see on a quarterly basis in the UK since pre-pandemic. This is the kind of level you see. That context is there. Look, this is a Labour government that wants to get plus 2% growth. We're not there yet. Yeah. But this is a stronger picture than many had assumed would be at the start of this year.
And still a lot of questions about how you're going to get to that growth. It can't all be house building, and there is going to be some confidence effect, it would seem, or at least that's what they seem to be relying on. We had an economist on earlier this week who was saying that can deliver something, and we'll see how much of what we saw in the last month is sustainable, given that we saw that warmer weather and the football and all of those other temporary factors that pushed up spending.
But you're notching up 0.7% growth or 0.76% growth on a quarterly basis in an environment of interest rates at 5.25%. They've come down to 5%, but that's been the level, and you're still managing to grind out that growth, and that's a very different picture to the likes of Germany and arguably France as well.
Yeah, and we're going to get more clues on the Eurozone picture for growth next week. We get those PMIs coming through, and interesting, our guest at the top of the hour talking about how we really should focus more on the services story, and that seems to stand out as an area of still growth for France and Germany. I was just looking at those particular countries, but the manufacturing story there is well below the 50 mark, suggesting contraction, and that's an ongoing drag on the Eurozone economy.
Yeah, and if you are worried about inflation still being there, still embedded in the system, then it's services which draws your attention, doesn't it, and the relative strength in terms of that particular carve-out. Coming up, Sweden records, was going to switch focus now, Sweden recording the first case of the new Mpox variant outside of Africa. Also reports that cases have been found in Pakistan as well. That's a day after the World Health Organization declared a global health emergency. We're going to bring you the latest on these developments. That's next. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big. 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. We are 45 minutes into today's session. The gains have been paired a bit, but you're still seeing some upside across the European benchmark. Stock 600 currently up 0.2%. To Sweden now, which has reported a case of the new Mpox variant. It's the first recorded outside of Africa. Bloomberg healthcare reporter Janice Q joins us for some of the details on what is still a pretty fast evolving story. What more do we know about this particular case then in Sweden?
So the person presented themselves in Stockholm for medical treatment, and they identified it, as you say, as this variant. The Swedish authority says that additional infection control measures are not needed at this point, but they do take this particular clade very seriously, or this particular variant very seriously, and they will be keeping a close eye on the situation.
And what more do we know about what's happening here then, Janice? Tell us a bit more about the wider containment efforts that we're seeing.
So the area itself is a very tricky area to work in. It's difficult to get good surveillance, although there are a lot of efforts being made. And you know, with the World Health Organization and the Africa CDC declaring public health emergencies, a lot of action is happening, and it is being taken very seriously. We are seeing other countries talking about upping their surveillance. So we got news from China that they are going to be looking very carefully at any inbound from Africa, any inbound travel. In Nigeria, they have intensified their monitoring and screening. In the Ivory Coast, they actually reported their first case 10 days or so ago, and last month. And they actually invited, I'm just going to read it because it's quite dramatic sounding. They've invited anyone keeping live wild animals without proper authorization to hand them over to the nearest forest station, or risk facing up to 20 years imprisonment and about $166,000 fine, which I think is quite a strong measure.
Yeah, indeed. And that's one example of some of the measures that the authorities are taking then to try and curb the spread of this virus. Talk to us about what we can think about, how much reassurance we can take from vaccine makers. Where are we in terms of producing the vaccines, getting them out to people who need it at pace?
Yes, the vaccine maker, the main vaccine maker, Bavarian Nordic, has said that they've got stock, and they have actually been building up stock for some time. You might remember that in 2022, we had an mpox outbreak globally. This was a different strain. It was a less virulent strain. It is still circulating, that strain. And so Bavarian Nordic has already built up some stockpile. Getting it onto the ground is more complicated for a few reasons. There are logistics around it that are tricky in the specific area that is the sort of epicenter, I guess. There are other issues. So the US has said that they are willing to donate. They had quite a stockpile from 22 that is still effective. It hasn't expired or anything, but they do need the countries to request it. And so the Africa CDC and the WHO, with other partners like Gavi, the Vaccine Alliance, UNICEF and the likes, are really trying to move things along as quickly as possible.
Thanks very much, Janice. Thanks for joining us. Bloomberg Healthcare reporter Janice Q, keeping us up to date with the latest developments on mpox. Let's switch our focus now to climate matters. Italy and the Balkans are on red alert, and Greece is bracing for more wildfires, with temperatures forecast to climb as high as 42 degrees next week. With climates on so many people's minds and on investors' minds, the situation in the region is set to see the issuance of more catastrophe bonds, and we could see the level of issuance there power past the record set last year. Joining us now on a number of these stories, Bloomberg's Eamon Farhat with details. Eamon, good morning to you. So is this summer, is this going to be out of the ordinary this summer in terms of the heat and the fires?
Yeah, I mean, it has been very hot. There's been lots of wildfires this summer, and scientists and meteorologists do talk about it being, an anomaly every time that these extreme heats do hit. When we think about last summer, the summer before, it seems like this anomaly is becoming the norm, and meteorologists are saying that we're having more and more extreme heat, more and more, hot summers in Europe where we're reaching 45 degrees Celsius in some places. So it does seem like this extreme heat is becoming more of the norm.
And when we talk about extreme heat in the summer in Europe, we inevitably include Greece in the list. But how widespread is this kind of geographically in terms of the extreme heat we're seeing in Europe? Or is it focused on a couple of countries that really are focusing on feeling the brunt of these increased temperatures?
Yeah, I mean, Greece, the Balkans, they've definitely been, at the forefront of this extreme heat. But parts of Spain, as I said, reached, I think, 47 degrees, a couple of weeks ago. Even the UK, we got our hottest day on Monday, reaching 35, which doesn't seem that hot. But in the UK, where there's not as much air conditioning, where overnight temperatures, if they don't drop below 20 or so, that can be quite difficult for older people. Extreme heat is hitting all parts of Europe. Some parts definitely more than others. But, from Paris, London to Athens to Madrid, extreme heat is everywhere this summer.
And how bad are the fires then, Eamon, when you compare them to other years?
Yeah, so I mean, the fires in the last definitely couple of years have been quite bad. This year, I think I was checking the data this morning, about an area the size of Greater London has already burnt this summer all across Europe. There was obviously that fire outside of Athens, which burnt, a huge area. The issue is that, these countries do pool resources. They do kind of share planes and firefighters, but if they're all being affected by wildfires, that makes things very difficult. So, you'll have jets being sent from France to Greece, but if France also has extreme risks, then it becomes very difficult to spread these resources across all the nations affected by wildfires.
Okay, so that's some of the burden sharing that we see between nations, and you give France and Greece as an example. When it comes to the financial costs, what are the potential implications of just how much this is going to weigh on national budgets?
Yeah, I mean, right now, Europe is spending, billions and billions on fire prevention. I mean, right now, they do spend about 90% of their budget on actually fighting fires, not preventing them from starting in the first place. And there is more of a shift towards these longer-term solutions to try and prevent, the fires starting, whether that be public awareness, whether that be kind of different kinds of buildings. But right now, it seems that when the fires do hit, they're literally putting out fires, so they don't have time to be thinking about these longer-term plans. Something like 40 billion euros right now is being allocated towards these kind of measures, and that only seems to grow. They're trying to buy more planes, have more equipment, have more training, because every year it's becoming more and more serious. And if they don't act, they know that the consequences can be really catastrophic.
Okay, Eamon Farhat with the details and an update there in terms of the importance of the extreme heat and what it means, of course, on a social level, but also financially, economically for the nations hit as well. Eamon, thank you for the update. Here's what else to watch out for today then. 1:30 p.m. UK time, we're going to get some details around US building permits, so that will give us a gauge in terms of parts, at least, of the housing market. We get the housing starts as well. That will be a sector, of course, screaming out, you would have thought, for those rate cuts, with mortgage levels coming back down in the States. So mortgage rates have moved lower stateside, but we'll get a gauge on terms of the housing market as well. And at 3 p.m. UK time, in terms of the consumer sentiment, we're going to get another touch on that with the University of Michigan Consumer Sentiment Survey. So that drops at 3 p.m. UK time. After that, positive outlook coming through from Walmart, even as they did talk about some downshifting in terms of consumer purchases. And at 6:25 p.m. UK time, we're going to get some more Fed speak, this time from Austin Goolsbee. We've already heard from him. He can speak at an event as well. So we'll see if he's adjusted his view, given the data that's come through in the last 24 hours out of the States. And finally, Moody's is going to be giving a sovereign rating on the nation of Ireland.
And we are going to have to wait the whole of next week. So Jackson Hole does start the middle of next week, but we have to wait the whole of next week to hear from Jerome Powell. The Fed chair is going to be speaking, but not until Friday at Jackson Hole. We'll, of course, bring you that live here on Bloomberg TV, 3 p.m. UK time. So that'll be quite late into the week, won't it? By the time it
given that
happens.
speech happens on Friday, to what extent will markets and investors be wanting to put on big bets before they hear from Jay Powell? And you pointed out you want to hear from him as to whether he aligns with what we've heard from the likes of Raphael Bostic and Austin Goolsbee.
Yes, because they're pivoting more towards the labour market data. Is Jerome Powell doing that as well, and a little less emphasis on inflation? Interesting that we heard from Nanette Heschler-Derb earlier on in this hour. She was saying that she thinks the message from Jackson Hole will be one that will nurture the tailwinds for risk assets, so one that will reassure, whether that's something like, it won't be as obvious as, yes, we're going to cut rates in September, but, you know, there might be something that leads the market in that direction.
Will that reassurance involve pushing back on expectations from some still in these markets that you get 50 basis points in September? Because would that smack of panic?
Yes, I think maybe that is certainly what the market's going to be looking for. And yes, since yesterday's data print, we see even more commentary around how 50 maybe not needed, 25 is what the market should be looking for.
Well, in terms of the movers today, as we talk about markets and focusing on some of the individual stocks, Ferrari is a standout, and as Anna was talking about, certainly in the break at least, and I'll bring you Anna's insights right now, the fact that Italy was closed for a national holiday yesterday probably accounts for a lot of the upside that you're seeing in Ferrari. But the gains there, and we saw a record hit in terms of the pricing, and we are still above that record level for the stock at 419 euros per share. So that car maker, luxury car maker, doing very well in the session, up 3.2%. Stellantis, different segment, of course, of the auto market, also doing quite well. And the auto sector, one of the best performing sectors, so Stellantis up at 2.8%.
Yeah, I mean, the auto sector was sold off, wasn't it, with a lot of that negativity in markets and the volatility that we are trying to all forget about. But it wasn't all that long ago. Ferrari had a good day on Wednesday, even before markets were closed. On to Bayer, and Bayer shares are on the rise after winning that appeal in the Roundup litigation, though, as you pointed out, Tom, it might not be the end of the story, but it is up strongly this morning. Bavarian Nordic, then, Tom?
Look, we got an important update from our healthcare reporter in terms of the spread of Mpox, with all the caveats that we're not seeing the kind of virulence that we had seen with something like COVID. But nonetheless, this is a company that provides the vaccines, so it is going to get a boost on the back of that Bavarian Nordic with the vaccines around Mpox.
Okay, quick check on some of the big listed mining and commodity names more broadly. A little bit of sluggishness partly explains the underperformance of London today. Stocks broadly in Europe are up. London is down a little. That's it for the opening trade. The Pulse is next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power. This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now, context changes everything.
Global stocks rise with growing optimism that the U.S. will avoid a recession, while Euro Stoxx 600 is heading for its best week since May. Plus, Sweden records the first case of the new Mpox variant outside Africa a day after the WHO declared a global health emergency. Ukraine says it's accepted the surrender of the largest group of Russian soldiers since the start of the war as Kyiv continues its cross-border incursion. So we have a lot of news, especially on the health front, to get through, but let's also take a look at the European markets map. Now, there's very clearly being priced in a Goldilocks scenario. This is on the back of some of the U.S. data that we saw yesterday. We saw bigger gains in Asia, but they're actually filtering through to Europe as well, with the FTSE MIB over in Italy, because it was closed yesterday for Ferragosto, August 15th, getting a bit more of a boost than other parts of Europe. The FTSE MIB in Milan, 2.2% higher. S&P futures, you can see 0.1% higher. And then we look, of course, at VIX. Last week was at 65, so we're definitely off those highs, 15 at the moment, and then yen 149.04. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, stocks have rallied after strong U.S. retail and jobs data, bolstering hopes of a continued soft landing. We're now joined by Paul Jackson, Global Head of Asset Management Research at Invesco, and Bloomberg MLive strategist Noor Al-Ali. So thank you both for joining us. Noor, yesterday was a big day. Finally, I mean, I don't know whether it's finally, because the market seemed to be a little bit all over the place, but certainly today they're pricing in this Goldilocks scenario.
Absolutely, Francine. And it's all on the back of that data dependency that the Fed has given way to. Now markets, every day, they look at every single data point that's out there. And based on that, they've decided after yesterday's retail sales, which were much better than expected, that strength of that U.S. consumer that continues to spend is enough for them to see those stocks rise again. It's almost as if last Monday was a really bad dream that we've all forgotten about.
Yeah, we've all forgotten about it until we haven't. Paul, are you expecting a lot more volatility? Is there a danger that actually markets latch onto one thing and then the trades start piling in and 2-3 days later they could all be unwound?
Yeah, I think we're in that time of year when volatility tends to be higher. There is a seasonal pattern to volatility. If you look at the VIX, we've just come out of the period when it tends to be at its lowest and going into the period when it tends to go up and be at the highest. And obviously at this time of the year, markets are thinner. So yes, they will get buffeted by data going in one direction or the other. And exactly, we've seen that in the last 10 days or so.
So, but what's your expectation for Fed? Again, a lot of market participants think that, you know, the market is actually ahead of themselves in terms of the number of cuts they're expecting.
I suspect the Fed is probably making an error, so I think once it starts cutting, it will probably go fairly quickly, and that's the history of Fed cycles. If you look at recent rate cutting cycles, in the first 6 months, the Fed has cut rates by maybe 180 basis points. Yeah. I don't think they'll go that quickly this time, but I think in the next year we could see 125, 150 basis points of cuts, starting in September, probably with 25.
Nora, when you look at some of the data points, what's the next rendezvous of that markets will be on tenterhooks to see what the Fed decides?
Well, look, I mean, we've had a lot of data this week. We've had CPI data, retail sales, a lot of it as well, you know, in the UK and in the US. Next week, though, we go back to that policymaker venue. We've got Jackson Hole coming up, so there's going to be a lot more emphasis on Friday and what comes next in terms of how policymakers are thinking about this latest stretch of data that we've gotten. Now, markets seem to have come to terms with the idea that they might have gone a bit ahead of themselves when they priced in a 50 basis point cut from the Fed in September. Now, whether or not the Fed complies with that is no longer the case, because if you're looking at market bets or swaps tied to that meeting date, you'll see that now they've come closer back to the 25 basis point cut. So a quarter point cut from the Fed is expected, as the other peers are. Now, when the Fed comes out next week and they say, well, look, we're not as worried about a recession, and that will probably translate to us adopting a much slower pace, that's actually going to be good for stocks. In a scenario where, you know, we're not worried about the economy yet, we're still doing very well, and that's the data that supported this. So that will actually revive that sentiment that we've seen, especially in the low volumes, you know, that Paul's just talking about as well.
Paul, I mean, if they do a 25 basis point cut in September, does it, first of all, just mean that they can cut and no market event happens if it goes smoothly? But also, do they have a narrow window because of the U.S. election? So they don't necessarily want to do anything in that cycle to November 5th?
Well, it would be very unusual if the Fed cuts rates in September. Normally, after August, the Fed doesn't change policy in the run-up to a presidential election. So doing it in September this year would be very unusual. They then don't have another opportunity until after the election. So they do it in September or they wait until after the election. But I doubt that a 25 basis point cut would have much of an impact on markets.
So do they have to do it to kind of show that they can do it? Otherwise, they risk being behind the curve.
Well, there is that, but I think also now that Donald Trump has suggested that if they change rates before the election, they're going to be messing with the election, then maybe they have to establish that they are independent, especially given what Donald Trump is saying about how he would like to have his hands on the interest rate decision process. So maybe just to be bloody minded, they will go ahead in September anyway, when in previous election cycles perhaps they wouldn't.
Well, treasuries have actually behaved orderly in the last, let's say, 10 days.
Yeah, absolutely. And you see a lot of the movements that we've seen in markets have actually been translated in that risk sentiment, but really yields are still, we're still at the front end. We're trading around that 4% mark where, you know, there's still a lot of emphasis here on that bond market rally. You know, I've long held that bonds are back, and every time I am defeated in my call when I see those yields rising again. But I do point out that the Fed easing cycle is beginning. Whether they start by a half or a quarter point in September or November, those cuts are going to come. And once they start cutting rates, it'll only translate into better returns for those yields. And so lower yields essentially for treasuries. It's just a matter of when rather than if. And at the moment, we are seeing that stocks are actually doing a much better job at pricing that expectations than bonds. And I think it's because bond traders have been bitten one too many times by policymakers saying we're going to cut, we're not going to cut. And so when we're thinking about how traders are assessing this, the stock market appears to be responding more to that data emphasis. And also we've got earnings ahead, NVIDIA, in just 2 weeks. So a lot of positivity here for markets to cling on to.
Yeah, and we had retail sales. I mean, again, NVIDIA, there was a huge sell-off last Monday when it comes to tech stocks. But how do you position yourself in equities, Paul?
Well, I think it's a tough one because I believe that if you're looking at market cap weighted US indices, S&P 500, for example, it is expensive, and it's expensive because of the, let's say, the Magnificent Seven, because of their elevated valuations. But there is a lot of enthusiasm around these stocks. So the momentum is there, but I'm just naturally very suspicious of pricing that is so high. So I think there is a lot of good news in that market at the moment. So I'm actually quite wary. And actually, yes, I believe that bonds are back. And for the first time in a long time, I went overweight government bonds in my model asset allocation back in June. 10-year Treasury yield around 3.7, not so attractive, but around 4, yeah, I think that's okay.
What do you do with Japan? I mean, if you look around the world, Japan is probably the most interesting story that we've had in the last 6 months.
Yeah, and frankly, I think just as I was talking about excessive valuations in some parts of the US stock market, there is an excessive valuation in the yen, but it's extremely cheap. And that is because the BOJ didn't tighten while every other central bank was tightening very aggressively. So the yen has lost a lot of value over the last few years. And I think the yen will eventually rebound as the BOJ continues to tighten, and particularly the Fed starts to ease. And with that rebound in the yen, and I think there's quite a rebound to come. We've seen a little bit of that already. With that rebound in the yen, I think Japanese stocks will suffer. And again, we have seen that over recent weeks.
And Nora, we have this great story on the Bloomberg terminal that's actually getting quite a lot of traction. So, you know, the carry trade that blew up the markets last week is now attracting hedge funds again.
Yeah, absolutely. It's just all a matter of positioning right now. And so, you know, when you do think about how the Bank of Japan came out last week and said, okay, well, maybe we won't raise rates if that market turmoil is there. And that's really eased those concerns in the stock market that Paul was talking about. You have seen the Topex rebound a little bit. You have seen Japanese stocks come back up. And then that reaction, that inverse reaction in the Japanese yen. But ultimately, as Paul points out, there's this overall a belief that the yen has really lost too much of its value already, and in a cycle where that's shifting with the BOJ raising rates while the Fed cutting rates, the current valuation of the yen, trading at around 147, 150 against the dollar, is still quite low, and there's a lot of room for that trade to unwind. Now, how far the carry trade has to unwind, you've had a lot of, people tell you, well, JPN came out and said just earlier the week it was about 70%. Other people have different odds of it, and it's really hard to tally this, right? Because that move has persisted for quite some time, a couple of years now, and so that takes time to unwind, especially with hedge funds and a lot of volatility and uncertainty when it comes to that rate dynamic.
Thank you both for joining us, Noor Al-Ali from Bloomberg and Paul Jackson from Invesco. Now, we'll have plenty more, of course, on the markets throughout the day. Also coming up is Walmart lifts full-year guidance. We take a look at the health of the U.S. consumer. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Was going to keep Real World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The conversations that matter and the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, Walmart shares are flat pre-market after soaring yesterday on raised sales guidance for the year. So the retail giant is gaining market share as Americans prioritize spending on essentials and cut back on luxuries. Well, Dasha Afaniaseva, a Bloomberg consumer goods reporter, joins us now. So, Dasha, when you look at the underlying strength of the U.S. consumer, where does Walmart fit into this?
Most of Walmart's growth has actually come from the higher income consumer. So they've quite definitely pivoted to that and targeted people who are up for convenience and who want a greater assortment of products and therefore are willing to pay more. On the lower end of the scale, it's an acknowledgement that the consumer is stretched and it's a promotional environment because they have been cutting prices. So it's that sort of dual track approach that tells us that the lower income consumers are very stretched. So consumer goods companies and retailers can only really find value at the other end. I think also they've got a really strong e-commerce strategy, and e-commerce has grown 20%. And that private label, that's actually an opportunity for them to win. They've been pushing that.
But Dasha, so if you look, at other companies, Pepsi, Nestle, they've complained about the state of the U.S. consumer. So how did Walmart actually buck that trend?
So they've followed the strategy of kind of pursuing the higher income consumer and going really strong on e-commerce, going really strong on lowering prices. They've also had the strategy of AI. I think it's interesting, a lot of the consumer goods companies I cover talk about how AI is this massive game changer, but Walmart is one of the few that's actually given a data point for what it's been able to achieve. It said that it created or improved 850 million data points through AI, and that to be able to do that in the same time frame, you need 100 times more staff, which I thought was really, really interesting. And then that's allowed them to sort of predict what people are going to want and allowed them to have lower inventories. All of that's added up to growing sales, to growing operating profit faster than sales, which is really quite a feat if you're cutting prices and if the consumer is indeed stretched.
Dasha, so interesting. Thank you so much for joining us, Dasha Afaniaseva, there, Bloomberg Consumer Goods reporter. Now, let's go to China. And China's convertible bonds were once considered a safe haven, but now they've been rocked by once unthinkable defaults. Now, let's get the story from Bloomberg's Justina Lee. Justina, great to speak to you as always. So why are Chinese convertible bonds selling off?
Yeah, I mean, all year we've been talking about weak sentiment in China, but in the case of convertible bonds in particular, they've been plagued by fears of default. And that's because we had the first ever case of non-payment earlier this year. And since then, there have been a few other cases. And there's also a unique dynamic with convertible bonds, right? Because they're a bond where you can convert into equity. And we've kind of seen this interesting case where, because the Chinese policymakers are now saying, if your company's market cap is too low for too long, they're going to delist you. And so there are cases where the small cap got delisted and that affected the convertible bonds. And you can kind of understand that as an investor, if you see that the bond and the stock have both been delisted, I mean, you would definitely sell in a panic.
So, Justina, what does this tell you about investor sentiment in China overall now?
Yeah, I think it just shows us that sentiment is still very weak, and there just is not a lot of appetite for taking risk right now. I mean, we talked earlier this week about how Chinese economic data are stabilizing, but not really turning it around. And I think the concern for policymakers is that sometimes that psychology can take hold, and that, if people keep wanting to stick to, the safest assets. They're not buying these convertible bonds. I mean, it's further shrinking the financing channels for a lot of these small cap companies. And, and that's why the government is also worried about people kind of piling into sovereign debt, because they feel like that rally has gone too far. But that's really kind of what a lot of people feel most comfortable investing in right now.
Justina, thank you so much. Bloomberg's Justina Lee there with the very latest on China. Coming up, the first case of the new Mpox strain is recorded outside Africa. We'll have all of the details next, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Next week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Sweden has reported a case of the new Mpox variant, the first recorded outside Africa. Bloomberg healthcare reporter Janice Q joins us now. So, Janice, what more do we know about the case?
In Sweden, the case patients had recently traveled to Africa and specifically to the region where the outbreak is happening most quickly and the strongest. They sought immediate care when they returned to Stockholm. Apparently, the authorities are saying that the patient doesn't need further infection control measures, but they are saying that they take this specific variant very seriously, and they will continue assessing the situation and see if other measures are needed.
So tell us more about wider containment efforts and the risk of border closures.
So both the Africa CDC and the WHO have been very, very clear. They do not think that borders should be closed. We saw with COVID-19 that it's not a particularly effective measure. Once something is moved, it's moved, and closing something retrospectively is not particularly useful. There's also a huge risk of economic fallout, and specifically in a region like the DRC and other parts of Africa, that is something that no one can afford. So that is not something that is recommended. Of course, it doesn't mean that no one will do it. We got news from China this morning that they are surveilling all incoming transport from Africa, so flights or boats. Nigeria, just on the continent, Nigeria has said they're also upping their surveillance. And last month, Ivory Coast actually reported their first case of this particular variant. And I'm just going to read to you what they're doing because it sounds quite dramatic. So they have invited anyone keeping live animals without proper authorization to hand them over to the nearest forest service station or risk facing up to 20 years imprisonment and a fine that equates to about $166,000. So countries are taking it seriously.
But Janice, I mean, and again, a lot of people will be, afraid. A lot of other people will say, like, we're making mountains out of nothing. The concern here is that this is a changing virus, right? So that it's not airborne, but you could still catch it if there's like a bit of saliva if you're speaking to someone quite close. So, how fast can this new strain spread, and how many versions are we likely to get of this?
We don't have that data right now, and scientists are really scrambling to get more. Surveillance in the most affected area, which is Eastern Democratic Republic of Congo, is not. It's a very tricky area to work in, and so it's been circulating there. This particular variant's been circulating there for at least 8 months, possibly longer. And the cases are very high there, both and deaths actually, more than 500 deaths in the DRC alone this year. So they are scrambling to get that information. It is still something that we will probably get more information in the coming days and weeks.
Yeah. Thank you so much. Our Bloomberg healthcare reporter there, Janice Q. Coming up, we speak to the chief executive of Five Guys in the UK and Europe on the fast food chain's appetite for expansion. That's next, and this is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Global stocks rise with growing optimism that the U.S. will avoid a recession. The Euro Stoxx 600 is heading for its best week since May. Ukraine says it's accepting the surrender of the largest group of Russian soldiers since the start of the war as Kyiv continues its cross-border incursion. Plus, Sweden has recorded the first case of the new Mpox variant outside Africa a day after the WHO actually declared a global health emergency. Now, on to things maybe a little bit more fun to talk about. After 3 years of food price hikes, U.S. and European consumers are voting with their wallets. Now, pressure on the sector has led to supermarkets and fast food chains offering more promotions and deals, including McDonald's in the U.S. launching a $5 value meal. Now, here in the U.K., Five Guys, which has more than 1,900 locations worldwide, has continued its expansion despite uncertainty around the economy. Let's discuss the outlook for the industry with John Egbert. He's chief executive of Five Guys in the UK and Europe. John, thank you so much for joining us. A lot more fun talking about burgers and milkshakes than anything else that's going on in the world right now. It's going well because you're expanding.
Yeah, so Five Guys, we have 270 stores in Europe now, 170 in the UK. We'll be opening about 50 stores a year. So at $1 million to $1.5 million investment per store, that's a significant vote of confidence in the future here in Europe.
So what's your biggest concern right now, or what's top of mind of things you worry? Is it planning? Is it staffing? Is it food price inflation?
Well, of course, the UK consumer and the European consumer has been under a lot of pressure of late. And how do you provide a value proposition to the consumer in this market? And the good thing for Five Guys is that we have the highest value for money fries, for example, in the business. The generosity, ounce for ounce, is the best.
I mean in terms of quantity?
In terms of value for money, right. for the fries. Competes with all the QSRs, for example. So, providing customers with great value for money. Five Guys has a lot of free stuff as well. We have free peanuts, free refills, 15 free toppings. So the headline price may be higher than the QSR, but when you add it all up, the value proposition is pretty compelling at Five Guys.
Is it worrying for your margins? I mean, given you also pride yourself of saying you provide very high quality ingredients that I imagine have gone up quite a lot in terms of expense in the last 3-4 years, but you haven't passed on that to consumers.
Yeah, so for other brands, the playbook, whenever you have an environment like this, would be to shrink the product and to compromise on the quality of the ingredients. And of course, Five Guys would never do that. So we have to focus on providing fantastic customer service along with the great product. And Five Guys is a treat. So you're not going to go to Five Guys every day or multiple times a week necessarily. So when you go to Five Guys, you want to have the best burger you can have, fantastic customer service, great milkshakes, and perfect fries. So we've got to focus on making sure that you get that.
So, and it's true, you go around the country and actually go and quality test. So every day you're having multiple burgers or multiple bites of burgers just to make sure that they all taste the same.
So we're very operations driven, and I'm fully certified to make burgers and fries. I can cook your burger next time you come in. And being able to know our standards and cook to standards. We don't have timers. We don't have any cook to order. We have to actually know the standards that we're cooking to. So we're all certified in the kitchen, and that's really the focus of the business is on burgers and fries. So important. You know, in the food business, it's all about passion, because you want to know the people who are cooking your food actually care about the product that you're getting. So making sure that we have people who are not only certified to make the product, but actually care about the food that you're going to be eating is essential.
But competition must be high. I mean, there's like a talent war, even for like waiters and people that are at that high standards. Do you have to pay more? How do you retain them?
Yeah, so first of all, we pay more than the minimums. So we pay more to start with, and every time you learn something new at the business, we increase your pay as well. We also have invested millions into learning and development. So we can take you from a crew member to being a senior leader in the business with hundreds of employees working for you. So that learning and development journey is something we've really take pride in. So 75% of our store managers come from our crew base now. So that's part of the journey we've been under.
Is the UK market different to other European markets? So do people buy and consume burgers and fries differently on the continent?
Every country is a little different. And we're surprised by every country that we open in. We just opened up in Portobello in the south of Spain. Did 170,000 pounds in the last week in trade, which was 3 or 4 times what we thought we would. We just opened up in Wembley, which we thought, all of the kind of high volume sites in the UK would probably have been done. But when Taylor Swift played, we did 180,000 in a week worth of business there. But when Harry Styles takes Olivia Dean for a burger to a Five Guys, that really helps and drives people in to go, that's something to try.
So are there any new countries that you want to be in Europe?
We're going to open Portugal next year. So we're looking at Lisbon, looking for a prime pitch site. We always want to open up in a kind of flagship location. So we're looking for the perfect site in Portugal.
We have a number of very talented food critics here. And I remember 2 years ago, it was all about the burgers. I mean, there were a number of burger chains that were opening in the UK because it was a hot new thing coming from the US. Is the space still very crowded, or is it less crowded in Europe compared to the UK?
Well, a number of the US better burger brands have come to the UK and opened and then closed shop and gone back home. We've been very fortunate that we have been able to open up in pretty much every pitch in the UK, and that's really given us a great defensive position. And now across Europe as well. We have 35 plus stores in Germany, France, and Spain as well, taking those prime flagship locations for the better burger segment.
Do you use AI or tech to streamline and to get better customer orders or better service?
We haven't figured that out yet. We are looking at kiosks for the first time because we wanted to be as famous for customer service as we are for great burgers and fries. And we weren't sure, do kiosks really fit into with that strategy? But there are a lot of young customers, particularly, who really want a digital experience. Our best till operator is no competition for them for a great kiosk. So we're providing that digital journey now and investing in that strategy.
But kiosk, it's less expensive for you, I imagine. But I feel like everyone is doing it.
It may be, but we're not doing it for that reason. We're doing it to delight the customer. And there is a customer subset that wants a digital journey.
I mean, indulge me. Who's your perfect customer, apart from the celebrities that can bring other people?
18 to 35-year-old looking for either something fun to do in an evening out, some place to take your family when you're shopping, going to a movie. All those are great occasions to think about Five Guys and go for a burger and fry.
Do you feel like you need to have a healthier proposition because of everything that's going on in the I guess, nutrition world, right? Even the Nestle's and Unilevers are trying to cut calories to give customers a healthier journey.
We're working hard to come up with some better alternatives to the burger and fries, but we want to make sure that it's the same caliber quality so that when you come in, you go, that's best in class. So we're not going to offer anything until we're confident that we have that level of product. But we do, and we will extend the product line in the business.
Do you have a say on the new products that go online?
Well, the Morel family, there actually are 5 guys, and they actually have to approve anything that we would serve. But we're working hard to convince them.
Any closures?
We have closed one site in Le Havre in France, which was, I guess, a casualty of Brexit. But other than that, we're opening stores rather than closing them.
And has it changed the way, there's been a little bit of a pattern that's taken a lot of people by surprise, post-COVID. It's people went out a lot more, and now people stopped going out. I mean, is it going really fast? I feel like the cycle of how we entertain and go out changes rapidly.
No, it has. We are social creatures in the end, and people going out and being able to be together again has been a powerful trend. It's been great to have people back in the stores for us, because seeing your food cooked in the open kitchen and being there with your friends and family makes a huge difference for us.
John, thank you so much for joining us. That was John Eckberg, the Chief Executive of Five Guys in the UK and Europe. But we'll have, of course, plenty more on the retail and hospitality business. For the moment, this is what markets are doing. There's been a bit of a rally, and that's really on the back of what we saw from U.S. data. Now, coming up, Ukrainian troops continue to advance in Russian territory, with Kyiv saying they captured over 100 Russian soldiers in a single day. Details next, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Ukrainian forces say they've accepted the surrender of the largest single group of Russian soldiers since the start of the war over 2 years ago. Bloomberg understands that 102 Russian servicemen were taken as prisoners of war on Wednesday. Now, Russian officials have already contacted them about a possible prisoner swap. We're now joined by Bloomberg's Tony Halpin with the latest. Tony, we're entering the 11th day of this operation. How do Ukraine and Russia view the situation on the ground now?
Well, Ukraine's top army general told President Zelensky last night that they were setting up a control point in the town of Sudzha to administer to the needs of the local population and keep order. And that suggests very clearly that Ukraine's planning a longer-term stay than simply a raid in this area. Russian authorities also yesterday were getting increasingly concerned about security in the neighboring Belgorod region, which suggests that they also fear that there will be an expansion of Ukrainian attacks and reaching into that region as well. So generally it seems that Ukraine, as you said, is expanding its hold on this territory, digging in, and it's for Russian forces to try to find a way to restore order and demonstrate to their population that they've regained control of the border. So far they haven't managed to do that.
So, Tony, what are Ukraine's allies making of the turn of events?
Yes, the Pentagon said that the US was still trying to understand Ukrainian objectives as part of this incursion, and it's clear that a lot of allies are looking at this and wondering what that means for the longer-term outcome of this war. Ukraine has been long arguing that they need to be able to use long-range weapons against Russia in order to increase the pressure on Russia, bring Russia to the table for a negotiated end to this war. That argument is being revived now that Ukraine has entered Russian territory, and so far we haven't seen the sort of response that many allies in Europe and the US feared if this particular red line was crossed. So there's a lot of discussion about what this incursion may mean for Ukraine's longer-term strategy in bringing this war to an end.
Yeah, so what do you think it means? I mean, again, there are many questions about, I mean, this was bold. Is it trying to show something to Russia, or is it's difficult to really understand the end game?
Yeah, it's been highly unexpected both for Russia and for Ukraine's allies, and it clearly demonstrates a boldness and an audacity in taking the fight to Russia after 2.5 years of effectively defending itself against the Russian invasion. There are theories that abound. One is that Ukraine may be trying to take territory in order to trade it when they come to the negotiating table with Russia for territory in eastern Ukraine, where fighting is continuing and Russia is slowly advancing on some of its objectives. Other theories are that this is an attempt to really increase pressure on Vladimir Putin inside Russia by demonstrating that Russia is vulnerable and to make Russians question the purpose of this war now that hundreds of thousands of Russians within Russia itself have been turned effectively into refugees in their own country.
Tony, thank you so much. Tony Halpin there with the very latest on Ukraine and Russia. Now, Gaza ceasefire talks are underway in Doha between Israel, Qatar, Egypt, and the U.S. in an effort to cool tensions in the region. Although Hamas representatives are not due to be present, officials say mediators will brief the Iran-backed group shortly after the gathering. While staying with Gaza when the war finally ends, attention, of course, will be firmly on the Gaza Strip. And the biggest question of all will be, how can it begin to recover? Let's discuss all of this with Bloomberg's Fadwa Hodali, who, together with the team, has been working on this piece that's come out today. Fadwa, the war in Gaza has left a staggering amount of rubble and unexploded weapons scattered across the enclave. When can we start talking about rebuilding, and who would be the parties involved?
Well, we can start talking about rebuilding is when we have a complete ceasefire. Without having a complete ceasefire, none of this will take place. First of all, we have to have a complete ceasefire. Then the teams will have to go inside the Gaza Strip, evaluate, come back with a report, and then the process will start. This process is very complicated. First, we have a lot of explosive ordnance under the rubble. There are estimates of about 20,000 bodies and remains are under the rubble. We have a contamination of the soil. So this all requests an expert to evaluate the situation. And once there is a plan and once there is a complete ceasefire, immediately this process will take place. But also there's another challenge. A challenge is when you have a ceasefire, you have to have an agreement for the borders and the crossings to open because you need machinery. And without the machinery, none of this could take place. You have 80% of the machinery inside the Gaza Strip that have been damaged and destroyed. And you need new equipment. And without the approval of the Israeli Authority, none of this could take place.
Fadwa, it is really unimaginable, as you say, the estimated 20,000 bodies remaining under the rubble. And UN humanitarians estimate only that will take up to 15 years to clear this debris. So is that the most intense challenge?
Well, the removal of the rubble and debris goes into stages. First stage is you have to clear the way for the Gazans to come back to their homes. And by them able to come back to their homes, you have to clear the explosive, the remains from under the rubble. And then once that is done, then the process will start. This could take a year, but it could take longer. And I'm saying a year, that's if enough funding is available and all the resources and the machinery and the crossings are open and the teams. So you have to have this magnitude of work being done in order for the process, the first phase to start. Once that is done, then, the estimates, they said 15 years, but actually it could take less than 15 years. It could take up to 7 years if you have enough funding, enough manpower, crossings are open, machinery can enter into the strip, and you have a way of finding where you're going to put all that rubble, because that rubble is contaminated, and you have to have the approval of neighboring countries. What are you going to do with this rubble that is contaminated? What are you going to do with it? So this is a very, very complex a case that needs to be taken care of, and it has to be done. Actually, now they're working on it before the ceasefire takes place. Because once the ceasefire takes place, right away, there has to be an agreement by all sides working into this. When I'm saying all sides, meaning the UN agencies, UNDP had put in a lot of effort in previous years, in previous wars, coordinating this with the donor country, with the Palestinian Authority, and of course, Israel was involved into this. So I would imagine with the scale of destruction this war have put, of course, coordination from all parties is needed. And what's needed is a complete ceasefire for this process to start.
And Fadwa, also, do we have any estimates on how much, once there's a ceasefire, the rebuilding of Gaza will cost? And who steps in to try and fund some of that cost?
Well, the estimates, we're talking estimates, about $80 billion from estimates. And who's going to step in? All donor countries have to step in. I don't think the issue of the funding is a problem. The problem and the challenge is making sure that the crossings are open and this process can take place without any obstacles and challenges. So all donors, all UN agencies, Palestinian Authority, everybody will have to chip into this process so it can make it happen.
Fadwa, thank you so much for joining us today. That was Fadwa Hodali there with today's big take. I urge everyone to go and read it. It's called Gaza Reduced to 42 Million Tons of Rubble. What will it take to rebuild? And this, of course, comes on the back of this U.S.-backed ceasefire talks restarting in Doha. There has been more and more calls to reconstruct the Strip. Coming up, catastrophe bonds power past last year's record as temperatures in Europe surge. More on the cost of climate change. That's next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Middle East and and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Italy and the Balkans are on red alert, and Greece is bracing for more wildfires, with temperatures forecast to climb as high as 42 degrees next week. Now, the situation in the region is said to see the issuance of catastrophe bonds power past the record set last year. Well, joining us now is Bloomberg's Eamon Farah. Eamon, is this summer actually out of the ordinary?
Yeah, this summer we have had extreme heat across Europe. You talked about temperatures exceeding 40 degrees in Spain and France, and in the UK we even got up to 35 degrees on Monday. Now, this summer, last summer, the summer before, these all seem like out of the ordinary hot summers. So it seems like the anomaly, the extreme heat anomaly, is becoming more and more of the norm. But yeah, it is pretty bad this summer as far as heat goes.
So where has extreme weather and heat been actually focused?
So yeah, Greece, the Balkans, definitely has been a focus of the heat. We've had some days where temperatures could be 10 or so degrees above normal levels, but also southern Spain, parts of France. I mean, basically, when you look at the list, everywhere has been hit by extreme heat at some point over the month of July, whether it be Paris, London, Athens, Madrid. Millions of people are feeling the effect of extreme heat in their lives.
So, what is the impact of the weather and heat, and what are the financial implications of this?
I mean, the impact is wide-ranging. You have the impact on your health. It can be, physical health, mental health. When temperatures don't drop very low overnight, that can really impact older people. But also, as you said, there's a financial cost as well. When it comes to wildfires, that is creating huge issues, especially in Greece. You had a huge area outside of Athens where, a lot of forests and a lot of buildings were destroyed. At the same time, we have this kind of catastrophe bonds, which are possibly getting to record levels. Now, in Europe, they aren't as mature, this whole system of catastrophe bonds, which provide an insurance mechanism against wildfires and other natural disasters. The models behind them aren't as mature, but we could see them becoming much more important as a way of kind of, financially being resilient against these more and more frequent extreme weather events and wildfires.
Eamon, thank you so much. Eamon Farah there with the very latest on this pretty terrible weather. Now, let's also look at what European stocks are doing. What a difference a week makes. I mean, it's incredible that the flurry of data that's been spurring optimism that the U.S. will avoid a recession has now put U.S. stocks on course for their strongest week of the year, where last week was actually mayhem. Up next, a Bloomberg Brief with Manoj Krani in New York, and this is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota. which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Krenner. You're welcome to Bloomberg Brief. Let's set that agenda. Global risk relocked and reloaded as the carry trade is re-established in dollar-yen amid fading recession fears. Guidance is everything. Applied Materials delivers record revenue with an underwhelming outlook. The stock drops pre-market. A vision for America. Presidential nominees Harris and Trump both set to deliver their economic roadmaps as we ramp up to the DNC. A very good morning. There is a magical sense of invincibility of the U.S. consumer spending like Billy-O. In the past, we're going into day 7 of a rally in the S&P 500. 6 sessions, and you put on 6.6%. The Russell 2000 at the bottom of your screen, up 0.4%, blew higher by 2.5% yesterday. This sense of invincibility in the retail sales numbers allays the growth fears for now. And you can all breathe easy. We're going to Walmart, we're being judicious, we're being smart. And if you wonder what the next leg up is, it is buybacks of the world unite. $1 trillion of buybacks are set to have taken place this year. Goldman Sachs buyback desk is just, the phones are hot. I know they don't do it by phones anymore, but the orders are coming in hard and heavy. Now, the 1% rise in the retail sales just blew a geyser up in terms of the momentum in the short end of the curve. What you had here was an unpicking of the need for dramatic rate cuts. We're now pricing less than 100 basis points, 92 basis points for this year. I think what we need to discuss next with Max Kantner is the quality of the cut. How hawkish will the cut be if it comes in September? That is the mood in the markets for now. If you thought that the carry trade was unwind, no. It was the magical opportunity to relock and reload by over 40%, selling yen and buying risk assets around the world. This is the biggest weekly rally that you've seen in Japanese equities since April 2020. Just take your mind back to the 5th of August. That's all I'm saying to you. Go back to the 5th of August and you begin to understand risk. Max Kantner, as I say, is the chief multi-asset strategist over at HSBC, and he weighs in on last week's sell-off writing this. Markets were hit by a triple whammy. Well, we got that August the 6th. Recession fears, concerns about AI, and the unwind of the carry trade last week. As scary as the drawdown and especially the surge in the implied volatilities was, risk assets are steadily getting back on track. They are indeed. Max Kettner, good morning. Welcome to the show. When I say relock and reload on the carry trade, so they've relocked and reloaded by 40% on that carry trade as of August the 5th. Does that shout embrace risk, or is it an ominous sign?
No, I don't think it's an ominous sign at all. I think it is really time to reload again. I think those discussions around how much of the carry trade still have to be unwound, I think some of those discussions were really a bit overblown because ultimately they're really, really dependent on what US growth and US activity data actually are doing. If indeed we are seeing more data, as we've seen yesterday, with better than expected industrial production data, with better than expected retail sales data, so with the growth picture really pretty solid, that should be really putting a bit of upside pressure once again on the dollar, a bit of upside pressure on dollar yen. That should be helping not only Japanese equities, but as he said, some of those carry trades as well, perhaps even currencies like the Mexican peso getting really back in vogue, but really in total, just support and more support for risk assets overall.
Okay, so it's not it's more than just a short, sharp reload then, just to square that away?
Yeah, I think so. I think we're much more likely going to think about those 2 weeks of being a little bit of like a bad dream. I think, I mean, I'm going to go on holiday the next 2 weeks. Now I'm sort of thinking, oh, I should have been on holiday the last 2 weeks and go back to the office on Monday and say, what was that? What was that all about? I think that's a bit what we're going to be looking at that episode in a couple of weeks' time and be like, yeah, fine, that was a bit of a scare. And yes, we had the growth scare. But let's be honest, when we dig into the details of the labor market in the US, fine, it is slightly slowing, but it's nowhere near recessionary. A lot of, for example, the jobless claims data we can explain away with seasonality, with one-offs like hurricanes. So it really depends on the fundamentals. And the fundamentals, particularly in the US, they remain rock solid.
Okay, they are rock solid. Quid pro quo, you are very pro-risk. I know you're nearly at your maximum capacity. Can I then evolve the narrative forward? If it is so robust and nothing on the horizon, Goldilocks has got her feet back under the table, the porridge is warm, how hawkish a cut? Do you still expect a cut in September? Let's actually box that away. Do you still expect a cut in September? And if so, Mr. Kettner, surely we must debate the hawkishness and the quality of that cut and the guidance.
Yeah, we absolutely do. We do think there is a 25 basis point cut in September because when you look at the inflation dynamics, in fact, look at this week's data, both on the PPI and the CPI side, not only the data, not only the absolute number, but also the internals. So what we're seeing sort of within inflation really looks pretty good, right? Super core and all some of those underlying inflation dynamics, they look really good. 50 basis points looks less likely, right? But 25 basis points, given that we've got that support from disinflation, from continued disinflation, looks absolutely on the table. And it's quite funny, like a week ago, probably the question would have been how dovish of a cut is that going to be? I don't think it's going to be very hawkish, right? I think they're going to say growth is still totally fine, but we do have the space to cut, and that's actually going to support risk assets even further then.
Well, let's talk about risk assets. I love the line from Walmart yesterday where the CEO says, we are being discerning, we, the shoppers here, that's normal people, Max, that go to Walmart, discerning, choiceful, and value-seeking. That's me. Discerning, choiceful, and value-seeking. Where are you most discerning in risk markets? If the carry trade is back, I mean, do you go for something as egregious, let's say, as being long Mexican peso, short yen?
Be led by equities rather than by credit, rather than by high yield credit, for example. Within equities, still really like tech, still like the AI story. I think some of that, those AI concerns around the earnings season, around the monetization, some of those concerns are really a bit overblown. So the tech and the AI story should continue. I think some of that dip that we've seen now offers a really great buying opportunity, but also still Japanese equities, still even after that rally, right? Like particularly for non-yen based investors, for sterling, for euro, for dollar based investors. On a hedged basis, Japanese equities still really make great sense. So there is, particularly in equities, there's quite a few things like the US, tech, AI. I think also the banks still make sense, both in Europe and in the US, you know, with now slightly higher yields, with really the growth data continuing to really show a pretty solid picture, pretty solid growth picture in the US. That should be also good for the banks, should be also good for some of the cyclical sectors like industrials. We have seen industrials globally, but particularly also in the US, undershoot against some of our models in that sell-off in the beginning of August. So there's quite a few things now that have really sold off, I think, unjustifiably much at the beginning of August.
You sound like a team that's gorging on risk. I mean, well, then let's put it in context. I'm looking at Deutsche Bank and their positioning narrative, and they're saying equity positioning is now underweight. If you look at the money that flowed in that shakedown, in that drive-by, money flowed into money market funds. You can say, Manus, that was majority of that was retail. Smart money was buying the dip. You saw that in some of the hedge fund narrative. How are the markets positioned? I mean, you are stoic. I will give you that. You're absolutely stoic in this view. So then what about the rest of the market? Is it underweight equity risk? And therefore, the ability to load up, as you espouse, is very real.
Yeah, I mean, first, it's great that you said I'm stoic only in my view, not in anything else. That is already, so I take that as a compliment. But I guess, you know, when we look at our view in terms of the sentiment and positioning side, in fact, a lot of the shorter term sentiment and positioning indicators that we track have gone back to the lowest level since we've hit March 2020 lows. So we've seen, for example, the VIX term structure. We've seen some of the de-risking of volatility target funds. Also, CTAs had by far the worst 5-day stretch since the sell-off around SVB, and even a bigger sell-off than during March 2020. So honestly, in terms of the sentiment and positioning, we've had such an extreme washout that in fact also keeps us pretty bullish, because, for example, when we look at CTAs and we look at volatility target funds, they probably need to start buying now. They're probably turning into forced buyers now after having been sort of forced sellers in the first 2 weeks of August.
Max, I will say this, you're not just stoked. Many a person comes on this show and they just don't have the same level of conviction in the calls. So well done. You know, you are strong on the calls. We take it on board. Max Kettner at HSBC, closing off the week where the S&P 500 rallies by over 6.6% and change. Other stories trending on your Bloomberg terminal this Friday morning. In an effort to reset his campaign, Republican presidential nominee Donald Trump is bringing on veterans from past White House runs. Corey Lewandowski and Tim Murtaugh, who worked on his 2016 and 2020 campaigns, respectively, returned to the fold as Trump loses ground to VP Harris in the polls. The number of new EVs from Chinese automakers being registered in the European Union is falling fast. They were down 45% in July over June, and the drop suggests that the EU's tariffs, which came into effect early in July, have slowed the influx significantly, helping the bloc protect itself from the automakers of low-cost competition. The British consumers follow the Americans in defying the signs of weakness. UK retail sales bounced back in July thanks to summer discounts for the Euros football tournament, unleashing spending at department stores and sports shops. Now, at the start of this week, we spoke to you about iron ore. This is the 5 days that saw a real implosion, down by over 8.5% at this stage. It's the steel-making staple. Macquarie says the market is oversupplied. You've got a flood of supply coming from the Australian and the Brazilian miners, of course, who are much lower cost. But this speaks to the slowdown in the demand side in China. Coming up in the show, Applied Materials, we mentioned it once, they extend their post-earnings decline despite hitting record revenue. What gives? That's next. And the Democratic nominee, Harris, is set to reveal her economic vision for the first time. More on that story with Lou Lukens of Signum Global Advisors right here on Bloomberg Brief. Context matters.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Next week, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all next week on Bloomberg Television.
It's Bloomberg Brief. I'm Manus Crenny in New York. Shares of Applied Materials, the drop in pre-market after forecasting sales in line with the street's expectations is actually underwhelming the bullish expectations of investors. Tom McKenzie is with me. Tom, it takes a lot more than delivering at the money numbers. Yeah. It's about the guidance, and I think what people are trying to understand is there a slowdown? They make the gear that go to the chip makers. So what exactly is going on?
Yeah, and look, Manus, we've talked about this before, haven't we, in terms of the gap between expectations from investors and the numbers that these tech companies and chip companies are able to churn out on a quarterly basis. And they came through with a beat in the third quarter, and they came through with guidance in the fourth quarter that also was above the estimates. Profits also coming in high. And by the way, it was a record quarter in terms of revenues for Applied Materials. But nonetheless, they weren't pushing through and punching out the kind of numbers that many analysts had expected. And that's why you're getting a bit of softness in the shares. Look, the context is year to date, they've seen upside of about 30% on this stock. The CEO saying that demand for AI kit used to churn out those accelerators and GPUs is still there. And I'll quote from Gary Dickinson saying that demand remains strong. It's going to drive, and I'm quoting, tremendous chip demand. If you're looking for weakness, it came in more of the legacy part of the business. So chip supply, or at least equipments to the companies that make the chips that go into things like fridges and phones and industrials and autos. A bit of softness there. But in terms of that demand going forward, the team at Applied Materials see that demand continuing. And by the way, so does Bloomberg Intelligence, JP Morgan as well, saying that this company is well positioned for those emerging technologies going forward.
I'm waiting for the fridge to talk to me. I sort of stand there hoping that the chip inside it will respond one day. Now, the money flows out from this administration, the Biden administration, the CHIPS Act, and there's been another grant, hasn't there? Texas Instruments winning $4.6 billion in a CHIPS Act grant. So we're coming to sort of the finale of this policy. And again, it's going to be about execution now, isn't it?
It is going to be about execution. Look, you paint a lonely picture of yourself talking to a fridge, which I know is completely disconnected from reality, Manus. But talking of those legacy chips and fridges, it's Texas Instruments that makes the chips that go into the fridges and phones. And that's an interesting part of this story, because the money that's come through from the CHIPS Act, 39 billion set aside, it's not just going towards those cutting-edge chips, it's also going towards the legacy chip makers. In terms of implementation, you're absolutely right. They have to spend it, they have to spend it wisely. They're building out 1 factory in Utah, 2 in Texas, and they have been given this award, 4.6 billion, but potentially up to 8 billion in tax credits as well. And this is in the final stages now of this CHIPS Act. It's expected to wind up at the end of this year. Texas Instruments, by the way, looking to spend upwards of $40 billion in total on the new build-out around producing these legacy chips for the US, as administration officials and those in the EU are increasingly concerned about China's push into that slice of the chips market.
Yeah, some would say these are incremental amounts of money in the overall scheme of the capex that's going to be needed. Tom, good to see you. Have a great weekend. Tom McKenzie there on the Tech Beat with us here on Bloomberg Brief. There's another stock worth keeping an eye on. You got it, Paramount. You thought that story had died. No, a potential bidding war is brewing as the media group. You've got Seagram Edgar Brofman is said to be close to making an offer. Bloomberg's Kimberly Adams joins me now. Kimberly, good to see you. How exactly did we get here? I mean, I thought we'd squared this away. You know, Sherry Redstone, David Ellison, and Skydance, a happy deal done in the end. So what's the spoiler?
You thought, hey, we're in the summer, we all can go on vacation now, right? Yeah. So what happened is, you know, they agreed, Ellison and Sherry Redstone, once they decided with this deal that it would be okay, they had this 45-day window where any potential bidder could jump in, you know, to put their stake into the company, whether or not they were interested. So now this is where we have Bromfin. And so what happened is we have Sherry Redstone agreeing to sell the family company, and she has 77% voting stake in this company, and she sold it for $2.4 million. That was the deal. But we're still waiting for this 45-day window, and up pops Bromfin.
Yeah. I mean, he's going to have to come up with some pretty lumpy numbers. He was in the running. I mean, just a couple of weeks ago, there was this story that was him and Bain were in the running for $2.5 billion. But if I look at the deal that's been put together for the overall Paramount, so Sherry's stake along with the others, you're looking at an $8 billion investment. So how does he close this gap? What do we know about him? What do we know he's going to offer?
Again, well, that bid was first reported for, as you mentioned, between $2 to $2.5 billion, right? Yeah. But he's no stranger to media. He already is on a chair at Fubo TV, which is the sports network there. He led an investment bid, by the way, for Time back in 2017, unsuccessful bid at the time. So he is ready to make this offer. And also, Ellison and Redbird Capital, those partners, they were going to invest $8 billion for a controlling stake in Paramount. And they were going to merge it with Skydance, which would value that company at $4.75 billion. Okay. So Brofman is coming off, and he's framing his proposal saying it's better for investors because it won't dilute. Right, it won't dilute the company as he believes Skydance would. So his group, according to the Wall Street Journal, he's having talks right now with backers like Fortress Investment and Roku, believe it or not. And all this coming on the heels of Paramount with what, 2,000 jobs that they just, you know, announcing this week that people who work for the company are laying off, getting their jobs axed, you know, so.
And they wrote down the value of their TV assets.
But this isn't over, because it's the 21st is when that 45-day window closes. So this dance isn't over. The dance card is still filled.
Well, you just make sure you're ready to rock and roll, because I get a feeling that this could turn into a merry dance of a few more people.
We should put our money together and buy it.
Well, listen, you get the Amex side, I'll give you my Visa, and we'll rock and roll. That's Bloomberg's Kimberly Adams. She's got faith that I've got a few more dollars than that. Coming up on the show, what else is going to make the headlines around the world? Well, these are fairly potent images concerning the spread of Mpox. Context matters on Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond. Edition of Bloomberg Brief. We got there. Front pages for you. This is what's making news headlines around the world. Kick off with the New York Times. Thailand has a new prime minister. The heir of a powerful and polarizing dynasty has been picked to lead. And that's just 2 days after the previous prime minister was ousted. It marks just the latest blow to Thai democracy. BBC runs with Mpox. Sweden has recorded its first case of a more dangerous type of Mpox outside the African continent. At least 450 deaths in the initial outbreak in the Congo. The WHO has declared the spread of the virus a global health emergency earlier this week. And on Bloomberg, we're leading with a top Chinese chip gear maker suing the Pentagon to void sanctions. Now, the manufacturer is AMEC. The case is centered on being placed on a blacklist by the Pentagon, and the company argues that it's been unfairly linked to the Chinese military. We're counting down to the DNC, and we're going to catch up with Lou Lukens of Signum Global Advisors on what to expect as both Trump and Harris lay out their roadmap for the economic policy for the United States of America. Good morning from New York.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Crenny. Let's set your agenda. Global risk relocked and reloaded as the carry trade is re-established in dollar-yen amid fading recession fears. Outlook is everything. Applied Materials delivers record revenue with an underwhelming guidance. The stock drops pre-market. A vision for America. Presidential nominees Harris and Trump both set to deliver their economic roadmaps as we ramp up to the DNC. Very good morning. It's been the best week for stocks in 2024. We're up an eighth of 1%, holding on there. The invincibility of the consumer is affirmed in the United States of America. 24 hours ago, up 1% on retail sales. We're going into the seventh day of a rally in these equity markets. The Russell 2000 up 2.5% yesterday. The growth scare pushed aside. We've just had HSBC, Max Kettner, full on risk taking everywhere. He wants to be long of equities. He wants to be fully max bull in the equity AI trade. And that came through from the Bank of America story as well on the fund managers survey. Buybacks aplenty over at Goldman Sachs. Buyback desk, it's on fire. Yields, is it time to re-embrace your inner bond buyer? Because you got this backup in yields. Two spiked by 16 basis points at one juncture yesterday. As you can see, we're giving back a couple of pips this morning. The debate now will be is the quality of the cut that you get in September. 5-6 days ago, it was about a dovish cut. Now we must debate whether it is a hawkish cut. And dollar-yen, I get a little bit of a give back this morning. This is a drop this morning in the dollar trade. Nomura are saying the shorts are relocking and reloading. And you've got a real progressive move in Japanese equities. Again, a top favorite of HSBC, Max Kettner. Get in there on your Japanese equities if you want diversification. The Nikkei finishing the day up 3.64%. Let's get back to politics on this side of the pond. The Republican presidential nominee, Donald Trump, takes a jab at his Democratic opponent's economic record. VP Harris prepares to unveil her economic agenda later today. Let's take a listen.
Harris has just declared that tackling inflation will be a day one priority for her. It's going to be day one. But day one, really, for Kamala was 3.5 years ago. Where has she been? And why hasn't she done it?
VP Harris and President Biden spoke yesterday in their first joint appearance since he dropped out of the race.
I could speak all afternoon about the person that I am standing on this stage with.
Our extraordinary President Joe Biden.
I have an incredible partner. The progress we've made, she's going to make one hell of a president.
Ringing endorsement there from the president for Harris. Joining us now, Courtney Rosen of Bloomberg Government. Courtney, good to see you. Getting up early. It's going to be a busy week for you next week. So let's set the table. Today's about economic policy. How much depth will there be apart from banner headlines?
We're going to hear the most specificity that we've heard so far from Vice President Harris about how she would govern the economy should she be elected. She's going to propose up to $25,000 in assistance for people buying a home for the first time. Now, if you'll remember, housing funding or support for housing was something that President Biden wanted to do but couldn't get Congress to approve. She's also going to talk about limits on price gouging, which is another topic that has come up given inflation and grocery store prices. So we're going to hear her talk about what she wants to do for the economy, and we haven't heard so much about that so far in the campaign from her.
Yeah, and obviously she's going to need Congress again if she's going to go for this. I mean, home affordability in this country is pretty tough at the moment. And you've got to say, 66 million people don't even earn enough to buy a $250,000 home. So it's ambitious. Let's pivot to Trump. Obviously, again, there's been a lot of accusation towards Trump. You know, stop your whining, I think is what Nikki Haley had said towards former President Trump. What is his strategy? Because there's been a shift in the hiring as well. Corey Lewandowski is back in the inner circle. What does that mean for strategy?
President Trump or former President Trump, I should say, is still trying to figure out what his strategy will be against Vice President Harris. We've heard a lot of different lines of thought from him in the last couple weeks about what vulnerabilities that he'll seize on when he's trying to compare himself to her. When Bloomberg interviewed President Trump last month before Vice President Harris was in the race, he talked about supporting new tariffs and he talked about decreasing the corporate tax rate. So those are two economic ideas that he brought in about a month ago. We haven't heard him talk about that a ton. And so we'll have to see how the strategy shifts when we have new folks coming into his orbit on the campaign.
Okay, let's see, do they make a difference and a shift in strategy? Courtney, thank you so much. Courtney Rosen there of Bloomberg Government. My guest this morning is Lou Lucan, Senior Partner over at Signum Global Advisors. Lou, good to see you this morning. Let's just step back from this for a moment. There's been this halo effect around the Harris campaign. It's been a brat summer. Memes have been flying. Social media is really, really galvanized. And it's almost like this halo effect in raising money and awareness and voter awareness. That momentum, have you seen this before in political history, and will it last is the key issue?
So it is somewhat reminiscent of what we saw with President Obama's first campaign, the level of excitement that we're seeing at the rallies and in the crowds, and the momentum. And it is definitely a honeymoon phase. I think it will certainly continue through next week. I expect the Democratic National Convention will be extremely well choreographed, highly scripted. There'll be from former party elders, President Obama and President Clinton, to grassroots supporters, all singing Kamala Harris's praises. But after the convention, I think reality will start to sink in, and she's going to have to do a better job, I think, of defining her policies. President Trump, in that clip that you showed, is not wrong that her day one Harris is to pick the good parts of Joe Biden's economic policies, and there have been many good parts, and to make sure that voters understand what the Biden-Harris administration has been doing for them over the last 4 years, and to pledge to continue those policies.
It's interesting. Various people have sort of said to differentiate herself from Biden, she must set herself apart with a future economic policy. But from what you're saying, it is aligned with the Inflation Reduction Act, aligned with the CHIPS Act, and progress those forward? Or is it to try and differentiate in some kind of way what she is going to bring?
I think she has to align with those policies. It's very hard for her to distance herself from policies where she was at the table for the last 3 years making those decisions. She can align with those decisions, but also propose new policies for the future. And I think that's what we'll see her trying to do. So this idea of, going after price gouging or help for people to buy homes, those are new ideas that she can build on. But it has to be a combination, I think, of taking responsibility and ownership of the policies that have been put forward over the last 3 years and that have been largely successful, I think. But at the same time, she has to distance herself from high prices and immigration policies. So it's a very tricky path for her to walk.
She's going to need full Congress support. I mean, if you're going to hand out $25,000, if you're going to hand out $25,000 in support. When interest rates are 6.5% on mortgages, so giving money out in this kind of housing market is an anathema if you really think about it. And price gouging, you're going to need full Congress behind that. So these are headlines, but you need full Congress behind you to deliver on those.
Well, if it's budgetary policy, so for example, fiscal support for buying houses, Democrats could do that if they have a simple majority in the Senate and the House, and they control the White House. So using budget reconciliation. So right now, it looks like Republicans will likely take control of the Senate. If Republicans control the Senate, she will not be able to pass those policies, and I don't see them going along with those. If, however, Democrats can keep control of the Senate and take control of the House, they could pass some of these policies.
Okay. I'm looking at some of the polls, and we update our own. The most recent one that we've had was the New York Times Siena poll. Harris 50% and Trump at 46% in Wisconsin, Pennsylvania, and Michigan. And what I want to understand from you is, where does she and can she cut through in Pennsylvania and in Michigan? She is very vocal on abortion and has the capacity to really win that narrative. Relative to Trump seems to be the general consensus. Is that what will cut through in swing states? Or how do I differentiate what will cut through and move the dial?
So abortion is definitely an issue that is motivating the parts of the Democratic base. The polling has shown since Kamala Harris entered the race that other very important demographics within the Democratic base are much more motivated than they were when Joe Biden was the candidate. I'm talking about young voters, black voters, Hispanic voters. In all those groups, the level of enthusiasm and the number of people saying they will vote for Kamala Harris has gone up in the last 3 weeks. So this is going to be an election about core voter turnout and getting out the base. And I think having her as a candidate, thus far, the polling indicates, is going to drive much more enthusiastic Democratic voter base turnout than Joe Biden's candidacy was doing.
How much truth do you put on the narrative that the Trump campaign is flailing? It's in disarray. It doesn't know the right direction to go. What veracity is there to that?
I think there is some truth to that. And I think Donald Trump has a very effective and very professional campaign organization working for him. Their challenge is that the candidate, Donald Trump himself, is relatively undisciplined. So we've seen this in these press conferences, including the one he gave yesterday, where he essentially talked for 2 hours, but he has a hard time sticking to message. There are very effective and simple messages that he could be putting out as he tries to attack Kamala Harris, but he veers into the personal, which polling shows that voters don't like, and he has a hard time sticking to very simple economic messages. And so the campaign itself is a pretty well-run campaign. We saw this at the Republican convention. That was a very well choreographed and produced event. But Donald Trump himself is I think, thrown off. I think he was counting on running against Joe Biden. He believed he was going to beat Joe Biden, and he doesn't quite know how to run against Kamala Harris, and he's still trying to find his footing. I expect he will over the course of the next couple of weeks. But of course, early voting starts in some states in America in just over a month. So he doesn't have a long road ahead of him to really pull himself together and be more disciplined on the campaign trail. He's got to do it pretty quickly.
When Nikki Haley says stop whining, how relevant is that? She had a fairly robust following. I know it's on a TV show. I know she's got to say something sort of to pop the soundbite. I get it. I'm in the business. How relevant is that narrative?
I think it is relevant. I think she is pointing to a fact that many Republicans wish Donald Trump would stop talking about 2020, stop complaining that the election was stolen from him, stop talking about how the deep state is against him, and focus. There are some very effective Republican talking points. Prices are high in America. Many Americans find things unaffordable. The border needs to be controlled. There's too much illegal immigration coming over the southern border. These are very simple, effective talking points. Yeah. And Donald Trump tries, but then he distracts himself and he gets off topic and veers into these sort of personal grievances. And I think a lot of Republican voters, and certainly swing voters and independent voters, are tired of it.
Okay. Lou, let's see what's delivered in the headlines and the theatre of the DNC next week. That's Lou Lukens of Signum Global Advisors. Coming up, underwhelming sales, forecasts keeping shares of Applied Materials In the red this morning, pre-market down 2 3/4%. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top names in global leadership are on Bloomberg.
We are 40 millions. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Stock of Applied Materials, it's dipping this morning pre-market. Investors had high expectations for the AI spending to pay off, but they were underwhelming in terms of the guidance, and that's what's taken the stock lower this morning pre-market. Tom McKenzie is with me. So Tom, square it away, because it's not that the sales were underwhelming, it was the guidance, and this is about the foreboding of the spend by the big people that they supply in terms of AI build-out.
Yeah, and for investors who have seen a 30% run-up in shares, this is a stock that's trading at 22 times forward earnings. That's above its 2-year historical average of 18. So valuations may be looking a bit rich when they come essentially in line with the estimates for the third quarter. They guided a little higher in the fourth quarter. Profits are better as well. It was a record quarter for the third quarter. But when you've seen that run up 30% year to date, maybe this is a bit of profit taking coming through from investors. Part of the business was a little softer around the supply of chips, or at least equipment that makes the chips for things like the automakers and industrials. But looking ahead, the CEO executive is still very confident in that AI theme, that AI play. And I'll quote from the CEO saying that he is seeing that demand for AI data center kit going to be tremendous in terms of the demand going forward. JP Morgan also saying that this is a company that is well positioned for further upside around these emerging technologies. But when you compare it to the valuation, maybe this is just a bit of froth being taken off the top of this stock.
Talk to me about the CHIPS Act. Again, there's another headline this morning. Campaigning is ramping up. The DNC is next week. $4.6 billion for Texas Instruments. Can you contextualize that for me? I mean, nearly $40 billion has been handed out by this administration. Yeah. What is that in the scale of incentive to build bigger chips bases here in the United States of America?
It's slim, right? But it is not inconsequential. It's the $4.6 billion for Texas Instruments, plus up to $8 billion in terms of tax credits. But as you rightly allude to, in terms of the scope and scale of the spending that's coming through on these data centers, on these foundries, for companies like Texas Instruments and the factories, it is something of a drop in the ocean. They're looking, just as a single company, to spend $40 billion, so more than the entire CHIPS Act, which is $39 billion. Texas Instruments looking to spend $40 billion between now and about 2030. But these incentives obviously help to pave that path towards those goals. They're going to build an additional factory in Texas, 2 in Texas, 1 in Utah, and part of that will be funded, at least part of that, from the incentives coming through from this administration. And it's also a reminder that the funding isn't just going to those AI accelerators, the GPUs, the Intels of the world, the companies making these very high-edge, leading-edge, high-tech and cutting-edge chips like Intel and TSMC, but also to Texas Instruments, which supplies the more quote-unquote legacy chips for smartphones and your fridge, Manus.
And the fridge, Tom, never forget the fridge. And my iRobo as well, my little cleaner as well.
Yeah.
Full chip, full technology household here, the Cranny household in the United States. Tom, thank you very much. Have a great weekend. Keep the tech dream alive. One story which is perhaps one of the most read on the Bloomberg terminal this morning over the past 24 hours. It is on the Mpox virus spreading outside the African continent. Now, it's the first case reported in Sweden, and a Bavarian Nordic is the only company with a vaccine approved for use in the US and in Europe. The Danish company wants permission to use the jab for adolescents as the new variant of the virus spreads. Let's get to our healthcare reporter. It is Janice Q. She joins me now. Janice, I mean, this was centered in the DRC in Africa. It's spreading. It's gone into Europe now. What is the latest on the trajectory and how quickly this is spreading?
We are still waiting for better data. The DRC is a particularly tricky area to do good surveillance, but getting approval for adolescents for the vaccine wouldn't only be good for the vaccine maker. We know that so far in this outbreak, children and adolescents have been the most affected. In fact, 60% of the deaths in the DRC have been in children under 5. It is not easy to get vaccine approval in adolescents and younger children, even more difficult. But definitely with the public health emergencies that both the WHO and Africa CDC declared this week, it has prompted action. And so getting vaccines to the areas that are most affected, which, as you say, is Central Africa, is paramount.
And in terms of the containment, you know, the vaccine for this is produced by one manufacturer, but you know, we're a long way from any kind of major rollout in that. In terms of containment and border closures, what is the latest there?
So both the Africa CDC and the WHO have strongly said that they do not see a need for border closures. As we saw with the COVID-19 pandemic, you know, once it's spreading, closing borders is not a particularly effective measure. Focusing efforts on other measures would be probably far more effective. We have seen China say that they're going to be doing greater surveillance from anyone coming in from the African continent. Even in Nigeria, on the continent, they are also upping their surveillance. And so there are containment measures in place, but again, I think looking at the epicenter, which is really Central Africa, and trying to find containment measures there, which can include things like antivirals. It doesn't have to be just vaccines. I mean, even something as simple as a really good household disinfectant can help to kill this virus. And so getting that messaging across, getting you know, people on the ground to get out to these communities, that is key.
Yeah, as you say, a very simple disinfectant can be effective. Janice, thank you very much. Janice Q on the very latest from the Mpox spreading from the center of Africa. Coming up, we are at the end of a pretty exciting week for risk. We're going to set your agenda for economic data and Fed speak. Don't forget, context matters every day on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Day ahead looks a little bit like this. Economic data, you've got U.S. housing starts and building permits at 8:30 a.m. That's on a day when, of course, Harris is set to announce incentives for first-time buyers if she comes to power. Mitch, consumer sentiment hits the tape at 10 a.m. And then Fed speak. Chicago Fed President Austin Goolsbee at 1:30 p.m. Let's hear what he's got to say. Big moves in the bond markets yesterday. Short end of the curve up by 16 basis points at one juncture. Some stocks on the move for you. You've got Fox Corporation rallying. Wells Fargo double upgrades the stock from underweight to overweight. The analysts highlighting sports streaming segment as the opportunity. Microchip rising after Piper Sandler boosts the stock to overweight, seeing gross margins on the upside, up 2.5%. I'm going to leave you with a vision of equity markets. The flow show from Bank of America makes it very, very clear. Money is flooding in, not just to U.S. equities. $5.5 billion went in the week through August the 14th. But globally, the flow into equities has been for 17 weeks in a row and attracted $11.5 billion. So that flow is there. And in terms of the debate, it will now be, if there's a cut of 25 basis points in September, what is the quality of that cut? Would it be a hawkish cut? The narrative continues on Bloomberg Surveillance from the Brief team. Thanks for watching.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Aggregate profits look great, but it's really just a couple of sectors that are driving it.
Sentiment did get a little bit dented around large cap tech earnings.
Some of that negative correlation to equities is coming back.
Our view is that a soft landing backdrop is good for a broad swath of companies.
I think this is more of an unwind than a momentum flush. The low volatility period is behind us.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Now, this was a week to remember. This was a good week. Welcome back. Good morning. This is Bloomberg Surveillance. With stocks headed for a seventh day of gains, we have just seen the biggest six-day rally in the U.S. in stocks since November 2022, with the S&P now just 2% below the all-time high reached last month. Whatever the opposite of a toxic brew is, that is currently what we're seeing right now. This is a Bloomberg Surveillance with Anne-Marie Hordern, Danny Berger, myself, and John Farrow should be back on Monday. That is what we're expecting. And honestly, Danny, to me, what it really highlights is how far we have come from the turmoil and uncertainty of last week to the Goldilocks of today.
It's so true, 8% higher than we were from the lows. I mean, you look back 6 months ago and strong data was this market's worst enemy. And now, to your point, we're 2% away from all-time highs. Bond markets, on the other hand, maybe I get hate for this, but they've just been pricing in nonsense this entire cycle, just swinging from one extreme to the rest. Rarely can we say this, but at least for now, it seems like equities were right on the strength of the economy and bond markets were too dour.
Maybe they were too dour, and yet they didn't actually get blown out of the water because, frankly, this is an environment where suddenly you can have equity returns that are coming in strong. You could have retail sales coming in at the hottest level going back to September of 2023, and the Fed is still expected to cut rates. And Anne-Marie, that is the difference. It's creating this, as Jim Reed said, sun-kissed, bullish August holiday.
Bank of America says, take a deep breath, everyone. But it's pretty incredible that within days, the market has been pricing in almost a hard landing to a soft landing, very data dependent. I think that was really shown yesterday in the retail sales. You still see this propensity from the U.S. consumer to spend, but Mike McKee highlighted what they're spending on potentially changing a little bit. They want to make sure they're getting those core goods, groceries, and less of discretionary items like clothing, which is why I'm interested to see how the University of Michigan comes in today. A lot of people say it's distorted by politics, but where is the sentiment right now for the American consumer?
And where is the sentiment right now for the Federal Reserve? Will they come through with what this market is hoping and expecting from them, given the fact that this economy is still chugging along? Here's what's on deck for the Federal Reserve next week is Jackson Hole. That will be maybe a time for real policy prognostications. We also get a jobs report September 6th, September 11th CPI, and then on September 18th, that Fed decision. So far, the rhetoric from the Federal Reserve officials, Danny, to me, has really highlighted that even the hawks are becoming doves.
And I think Alberto Muslim is a perfect example of this. He is newer to the Fed, of course, and was really, really hawkish just 2 months ago. 2 months ago, he was saying that he needed quarters of good data, not months, but quarters of good data. Now with just another month of good data, he sounds different. He's saying we might be nearing the time to adjust policy. And again, it's not, doves flying out. We're definitely going to cut, but it's notable for him.
This is maybe when doves fly. There's this issue right now. Well, I'm going to be in Jackson Hole. I'm looking forward to hearing whether a policy shift really is in the cards. Emery, you're heading to the DNC, and frankly, to me, this is when suddenly the narrative ping pong that we've been witnessing in markets shifts to very much the political sort of march to November.
Right, and the political rhetoric coming out of both camps is drilling down on the issues Americans have been caring about and have been caring about for months, and that's the economy. You saw that yesterday when Trump was trying to stay on message that a lot of people have asked him to within his campaign. He struggled a little bit, but I thought it was more interesting the optics of it. He stood in front of groceries because while Democrats are trying to show that, yes, the inflation rate is coming down, the rate of inflation is slowing, but the fact is American consumers are not feeling it because prices have not dropped. So that's to one camp they're trying to highlight. The DNC is all going to be about affordability as well. We'll see that today with Kamala Harris kicking off really her economic policy, and today is about housing, which makes sense because we have housing data as well at 8:30.
We do have housing data followed by University of Michigan sentiment. Right now in markets, you could see potentially a seventh straight day of gains as potentially people look for this ongoing sun-kissed August holiday, as Jim Reed put it, 55.69 on the S&P, just basically close to flat. The euro dollar also just kind of meandering, just south of that 110 place. And yields, really, and this to me, I mean, and Danny, you were mentioning this, they might have been trading on their own universe, but that universe looks like it's fine in terms of expected rate cuts, in addition to the strength that we're seeing in the economy. Whether they'll be proven to be right, we shall see. We'll get into that in just a second. Coming up this hour, we've got John Stoltzfus of Oppenheimer as equities rally on a stronger U.S. consumer. Bloomberg's Josh Wingrove as Vice President Kamala Harris prepares to reveal her economic agenda, and Noel Dixon of State Street on growing market volatility. Let's begin with our top story. U.S. stocks looking to extend a 6-day rally after economic data and earnings from Walmart eased fears of an incoming recession. John Stoltzfus of Oppenheimer doubling down on his bullish U.S. equities call, saying that as the U.S. central bank moves toward easier policy on greater confidence, that its efforts to put untoward levels of inflation in check have been or are near being met. John joins us now. John, thank you so much for being with us. I just want to get a sense from you what you make of this incredible rally that's the biggest going back to late 2022.
You know, what we've seen here, Lisa, I think is a lot of people mistrusting the Fed, jumping to conclusions on a lot of things, and then all of a sudden getting the gist of actually perhaps the Fed chair is talking the talk and walking the walk. And we think we've got a good situation here. Things are indeed getting better, even as some things remain poor or worsen in terms of just whether it's geopolitical stuff or questions as to the outcome of the election in November, or questions in the fact that, you know, not every company is producing these great results in aggregate. We see the S&P 500 delivering so far for the second quarter.
John, you've said in the past that this is not a Federal Reserve that needs to cut rates. Do you still think that they're going to cut rates close to 100 basis points, albeit that's come off some of the more extreme prognostications that have been baked into the market, but do you think that that is necessary given the strength?
I think you know, the strength is more resilience rather than of a robust nature, and there's a big difference in the meaning of those words. And I think that the Fed at this point is likely to do a down payment in September of 25 bips ahead of the elections, and I don't think it risks a questioning of its independence politically by doing that. I think it recognizes the fact that we are seeing a slowing in the growth of inflation very clearly towards their 2% target, but not yet there. But they're considering now, and the Fed chair, as you mentioned a little bit earlier, has really mentioned that it's not just about inflation, it's about considering the unemployment number, in effect, and that full employment goal. So I look for 25 bips now in September, and very possible 225 bips, one in November and one in December after the election.
Don, as we get there, you can see that the path there leads to really diverging fortunes among companies, even within the same sector. And obviously the consumer sector is really the poster child for this, that you can have McDonald's with poor earnings, but Walmart with really strong earnings. In a time like this, how do you think about investing in individual stocks versus things like buying an entire sector?
Well, you know, we like, Danny, when it comes to investing in modern times, we like an alpha-beta approach. like to say you got to be like a kid. You got to know your alpha beta. So you'll play the passive index, and then you'll also have some alpha picks. It's the old adage of, you may not, you have to hedge whether you're in the right pew, even if, or in the wrong pew, whether you're in the right church or not, that old adage. And so when we look at it, essentially, you have to allow for the fact that you get these lifts sometimes that are just carried by a few names in a sector. On the other hand, there are sectors where it really is the individual performance that matters. But the consumer discretionary, the big thing about that, it was worst performing sector at one point coming into this, and now better retail numbers all of a sudden remind people that the U.S. consumer is not to be pushed under the bus. They're resilient.
Yeah, it has been. And John, even with the resilience of the U.S., I know you're still looking to get meaningful exposure to international equities too. This is something that so many people have called for, saying get rid of your home bias in the U.S., go abroad. But it's a trade that keeps getting smacked in the face every time we see data like we did yesterday about the strength of the U.S. So what makes abroad a playable equity strategy now?
Well, we have to think, you want meaningful exposure to the international developed markets as well as to the emerging markets. And within the emerging markets, recognize that a huge transition moving away from one country-centric supply chain is a big deal happening that'll benefit a lot of other countries around the world. But a recognition that the international investment for a U.S. investor, unhedged in terms of currency, is likely not to perform all that well until the dollar gets off its high perch. The dollar is on a high perch because we're doing better than its peer economies around the world at this point. And also the world remains a very uncertain place, which causes people to hug the dollar.
John, do you see a comeback of the carry trade?
Pardon?
Do you see a comeback of the carry trade?
Oh yeah, well it sure looks like it. If you look at the Bloomberg today, it looks like the hedgies are going back into it very quickly on the weaker yen. But we'd have to think that probably with not as much enthusiasm as they'd gone into that trade earlier, and probably looking to make an exit. But it adds to the potential for volatility in here going forward.
John, I also love to ask you something you mentioned earlier, which is that you think the Fed should go 25 basis points, partially because that would shield them from some political blowback. Are you saying 50 basis points would look political?
No, I'm just saying 50 bips looks kind of unnecessary at this point. But 25 shows that they recognize the lag effect in terms of change in monetary policy, or a move towards change in monetary policy. So 25 looks like the most prudent to us, with keeping in the pocket, another 25 bip potential in November, and even another one in December as needed.
What are you going to be paying more attention to next week, John, just to sort of wrap this up? Is it going to be Jackson Hole, or is it going to be the DNC?
I think it'll be both. I'm going to be watching both of those to see what the message is for the markets coming out of the DNC. And related to Jackson Hole, it's always a good one to get a view of the cognoscenti and the Fed, what they're thinking, and the latest reaction by the market. So the big thing is here, the second quarter earnings season, which is winding down now, really coming close to the end of it, will fade into the rearview mirror. And then it's what have you done for me lately? And it'll be very dependent upon data and upon things coming out of what people are talking about that they're going to do if elected.
John Solzfus of Oppenheimer, thank you so much, as always. Wonderful to have you, and I hope that you finally can take vacation after this sun-kissed holiday of an August week. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yaira Heckes. Yaira.
Hi, Lisa. The largest U.S. maker of chip manufacturing equipment, Applied Materials, delivered an in-line sales forecast, while third quarter results topped analyst estimates, with the company saying artificial intelligence was fueling demand. But investors had been hoping for a bigger payoff from AI spending, so shares are falling nearly 3% in the pre-market. Bloomberg has learned that Seagram heir Edgar Bronson Jr. is close to making an offer for Paramount Global. setting off a potential bidding war for the entertainment company. Sources say Bronfman is weighing an offer for National Amusements, the controlling company of Paramount, as well as Paramount itself. Paramount had agreed to merge with Skydance back in July. And Typhoon Ampel is edging closer to Japan's main island, disrupting transport and triggering warnings of floods and landslides. Carriers, including Japan Airlines and ANA, have canceled around 90 flights, impacting more than 15,000 passengers. The weather agency is warning residents to stay indoors and be aware of water hazards, while companies are urging employees to return home early. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, Harris making her policy pitch.
No senior should have to choose between either filling their prescription or paying their rent. Together with Joe Biden, our president, we finally addressed the long-standing issue.
I have an incredible partner. The progress we made, she's going to make one hell of a president.
Up next, you're watching Bloomberg Surveillance.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Next week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
We will be swimming with the moose over in Jackson Hole to see whether they have potentially some sort of insights into monetary policy. Welcome back. This is Bloomberg Surveillance, not Bloomberg Moose Talk. And we are looking at a market that is poised for a 7th straight day of gains after, although actually giving up some of that. It has been the biggest 6-day rally going back to 2022 at a time. And Danny, I think that you nailed this. A real question about whether the bond market is sending a different message or whether it's paving the way for this perfect Goldilocks.
I guess the confusing part about it is some people look at 50 basis points and saying, no, that's not like jumbo super accommodative cuts. That just gets us back to normal. So that could be an agreement with good economic data. But I think after a day like yesterday, when everything did come up roses, everything was strong, the market does have to do some serious repricing. And I think just given that, you could say, if the labor market comes in strong next month with that data, maybe the bond market will just have to do this all over again.
One of the interesting things is people are not talking about the neutral rate anymore. Suddenly that looks a lot lower than it did, say, a month ago. We will not be focused on this next week. We will be focused very much on politics. Under surveillance this morning, Harris making her policy pitch.
Every Every senior in our nation should be able to live with security, stability, and dignity. No senior should have to choose between either filling their prescription or paying their rent. Together with Joe Biden, our president, we finally addressed the long-standing issue that for years was one of the biggest challenges on this subject.
I have an incredible partner. The progress we made, she's going to make one hell of a president.
Here's the latest. Vice President Kamala Harris set to roll out details of her economic policy at a rally later today in North Carolina. Harris will reportedly propose offering $25,000 to first-time homeowners and a federal ban on food and grocery price gouging. Bloomberg's Josh Wingrove joins us now. Josh, there have been some questions around a number of her policies. I want to start with price gouging because it kind of fell flat, certainly in the business community, initially when it was rolled out by Joe Biden. Now there are questions about where she's looking to really attack price gouging at a time where particularly grocery stores are either capping or lowering their prices.
Yeah, well, first of all, good morning. I don't like this talk about moose talk, and then you bring the biggest Canadian you can find in, you know.
Do you want to go for moose talk? We could do moose talk.
Continuity here, you know, yeah, for sure. She is rhetorically just hammering on this. I think, though, there's two ways to look at this. Number one, Harris was an attorney general in California. She has sort of that built into her bones, and we're seeing that with her call to go after price fixing. She's signaling that the FTC and other agencies are going to be just as beefy as or even more so as they have been under Joe Biden. So that is a big signal and is in fact maybe one of the biggest signals she's sending here. Harris is saying she will use the levers of government if she wants to crack down on what she sees as abuse or pursue cases of alleged abuse. And so I think that that's a big one. But more broadly, I mean, people have been begging, Democrats have been begging Joe Biden to talk about grocery prices and inflation more succinctly for months. And so Harris is really pivoting to that with this pitch and saying, look, we pin a lot of the blame on that. That also has the effect of transferring the blame away from the administration and the question of whether the government policy and fiscal policy have sort of fueled the inflation here in the U.S. So she's, you know, kind of gets a good bang for her buck here by going after this at a time when I note voters just simply aren't blaming her as much for the economy as they did Biden. It's kind of this remarkable reset that she's benefiting from where she gets the benefits of some incumbency while also a little bit of distance from it.
Josh, I'm curious, though, why would they open up their economic plan with this idea of price gouging? The Washington Post, in an opinion piece, says when your opponent calls you a communist, maybe don't propose price controls. Doesn't this make Kamala Harris more vulnerable to Republican attacks?
I think it may. I mean, but the Republican attacks are probably coming anyway. I mean, we alluded earlier in the show to Trump's, press conference yesterday with the sort of groceries lined up on either side of him. This is what they're going to hit her on regardless. So I think Democrats think we've got to do something about it. But I'll say they've been going after this for years. So this is one of the weird moments we're in where Joe Biden might be standing off stage saying, we're already doing this, as she pledges to do something. For instance, in the meat packing sector, that is one that the Biden administration has been going after, saying that concentration there has helped drive price increases and essentially profits rather than passing on any savings or moderation in the last couple of years to consumers. So I think that on the sort of broader question, will Kamala Harris, go after grocery chains for individual pricing? I think that might be a bridge a little too far. But I think clearly if you are, for instance, grocers trying to merge or, just looking at how far you can push prices without triggering some sort of federal action, Harris is trying to send a signal here. Everyone you talk to around her says that those days as an AG have really shaped her thinking on things.
Josh, she's also going to talk about an expansion of a program that Joe Biden unveiled during the State of the Union, and this is for basically anyone that's a first-time home buyer can get as much as $25,000 back to help them purchase that first home. Is this just all rhetoric, though? Because she cannot do that unless she has a Democratic House and a Democratic Senate along with her come January 20th.
The short answer is yes, absolutely. It's rhetoric for sure. But we are going into a tax talk year, right? The winners of this election, both the presidency and the houses of Congress, are going to get to rewrite the tax code because no one's going to sit there with the Trump tax code provisions expiring and do nothing, because then they get hit with presiding over a tax increase. So there will be a tax deal next year in Washington, or at least everyone expects there will be. Everything Kamala Harris is rolling out right now is essentially her starting position. And so she's talking about that housing funding that would, of course, be reliant on some sort of spending agreement, whether in the tax deal or otherwise. And I think that's a lens for a lot of the stuff that we expect her to roll out today. We don't, by the way, have full details yet on what she will say. And I'm not expecting, like, dozens. As one source said, don't expect an 80-point plan. So I would just point that out. So I would not look for the fine print necessarily. But this is her starting point. This is where they think they're coming from. And one thing that's hanging in the air also is politicians make a lot of spending pledges in election campaigns. The deficit is not small, and neither Trump nor Harris are really talking much about it, about what they will do about it. We'll be watching today to see whether she nods to that. That'll be one of the big questions in these tax talks is, does either party actually really think that this is an issue, or do they think the boring path is sustainable as it is, or even could stand a little more spending without revenue on the other side that, of course, Republican lawmakers tend to not be in favor of?
Josh, you also mentioned Donald Trump's press conference yesterday, which you and Anne-Marie both pointed to as having groceries behind him. He did have this point where he was asked about this idea that those in his team have told him, stop doing these personal attacks to Kamala Harris, which he said, I'm entitled to do those personal attacks. Josh, what does that tell us about where this Trump campaign is going as we head into the final months?
Yesterday was a really good display of the tension with all of Donald Trump's campaigns, which is on the one hand, what his campaign wants to talk about, which is the economy and groceries, and on the other hand, what Trump sort of riffs on when they just sort of let Donald Trump cook. And the latter is what we saw, I think, with that remark. We also saw it earlier in the week with him saying that we're here to talk about the economy, but I don't actually think that's the most important issue. They are trying to keep him on message. Republicans around him and just Republicans generally think the path to the presidency and to success in the congressional races is just hammering inflation over and over and over. This has been the case in so many other countries where incumbents are falling like flies over this question. People are so mad about grocery prices. But with Trump, it's a package deal. And if you want a Trump, you're going to get all that comes with it. Democrats, for sure, have been celebrating the moments they've seen him on TV this week, thinking it gives them fodder. Time will tell, of course, who is correct, but that is the tension right now. Trump is clearly grappling with the message. I should also quickly note some staff changes on his campaign yesterday, or at least additions to his campaign, which is not a signal of how he thinks if things are going well or whatever.
Josh Wingrove of Bloomberg, thank you so much, as always, for being with us. We look forward to the next time. Just for this, to that piece that you mentioned, that op-ed in the Washington Post, this statistic in there. A government report on Wednesday showed that grocery prices in July were up 1% from last year. Annual grocery price inflation has hovered around that level for the past 8 months.
The issue is the rate of inflation is coming down, but people are remembering prices they paid for a few years ago. It's going to take a few years for psychology to have an effect.
Coming up, bumper harvest could lead to lower food prices. That conversation coming up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
What a week it has been. 6 straight days of gains that included the biggest rally in that period of time going back to November 2022. Welcome back. This is Bloomberg Surveillance. Right now, giving up maybe a little of those gains, but nothing pretty dramatic as you end a week light on data after a number of 1, 2, 3 punches that all pointed to resilience in the economy, yet still a path for the Fed to cut rates. S&P futures lower by less than 0.1%, 55.64. NASDAQ futures just marginally higher. But the Russell 2000, and maybe we talk about this more than its weight would suggest in terms of just how big the companies are. But Danny, it really highlights how this seems to be a perfect backdrop for so many people, for even some of the weaker companies out there.
It's so true, because it's this idea that the economy is holding up, the consumer is doing really well, see Walmart, see the retail sales, and we're still going to get cuts. This is what you were talking about before, Lisa, that you can have this perfect storm in a really, I don't know, a certain fairy tale character type economy, and still we are expecting cuts, and that's great for companies like small caps.
Is there something we should know that we can't mention the G word, Goldilocks?
I feel like we talk about her a lot.
I know, we do. So we should, you know, introduce her pet fish. You know, Juji, I don't know. Meanwhile, if you take a look at what's going on with respect to the bond market, you can see that kind of complacency being baked in that the Federal Reserve will be able to cut rates more significantly, even if the economy is resilient. 2-year yields, though, still hovering above 4%, 4.05%. You can see 10-year yields 3.88 and 30 years 4.15%. If you take a look, though, and Anne-Marie, you mentioned this earlier, so let's go there. If you take a look at what's going on with the yen, today you're seeing a little bit more yen strength, but yesterday a good deal of yen weakness, dollar strength, as people piled back into that yen carry trade. And we're going to get to that right now under surveillance this morning. Traders hopping back into that yen carry trade. According to data from foreign exchange broker ATFX Global Markets, shorts against the yen are climbing. The currency weakening alongside a rise in U.S. stocks thanks to easing recession fears. So out of the frying pan into the fire?
Well, I think the question is whether or not you're going to see another BOJ hike or not, an interest rate hike this year. I love how one portfolio manager put it. Really, people have pretty short memories. And that's what it feels like, because we were talking about the unwinding of this time last week. And now people are piling back in.
Another way that someone has said this, which I love, from Mark McCormick, saying that FX markets are serial monogamous. They can only concentrate on one thing at a time. And the thing we're concentrating on now is strong U.S. data. What happens when the next BOJ decision rolls around? And markets have been calm. Remember, the deputy governor, when he came out and said we wouldn't hike, it's because markets are not calm. Markets are pretty calm by all measures. FX volatility, it's down somewhere in its 5-year average. So this would allow the BOJ to hike again if they would. So what happens to all those carry trades that just reloaded thanks to the strong eco data?
Well, it raises this issue that we were talking about with Joyce Chang of JP Morgan, that basically it takes more than just 1 or 2 hiccup days to really unwind a lot of some of the overweights that we've seen in markets. Again, this is the reason why on Monday we were talking about potential volatility coming down the pike. And it turns out none of that transpired this week, even in the face of really potentially narrative shifting data. But this to me is the question. How much have we really changed from last week versus become just as vulnerable as we were then, with a significant portion of those overweights and carry trades still in play?
Or maybe it's this idea that the fact we could rebound so quickly means that we are resilient, means that you can put on those trades. And as long as you're just not looking at it on those days of volatility, that you'll be fine. Maybe this makes us, I don't know, even more complacent in some ways.
Well, especially if we get the whole full-throttled, really Fed put that a lot of people are expecting next week. Meanwhile, we're also focusing on politics. Former President Donald Trump taking questions from the media looking to defend his economic record. The news conference is at his New Jersey golf club, coming ahead of Vice President Kamala Harris's speech on her economic policy later today. Trump adding he feels entitled to personal attacks against Harris. You know, without getting into all of the personal attacks, there's a real question about strategy right now, Anne-Marie, and whether this is actually playing with his base, whether this is actually garnering some sort of enthusiasm to voter booths, or whether this is really a president who wants to go, or a former president who wants to go it alone with his advisors kind of wringing their hands and having their head in their hands.
I think Josh put it well when he said this is the whole Trump package. If you're going to get the economic message, you're going to get also some of the rhetoric as well. He tried to stick to script in the beginning, and then he started really going after Kamala Harris with the insults. That's going to work for the base. But what you continuously hear from his advisors, which are also even in the airwaves on Fox News, talking about the fact that they wanted to stick to two things, the economy and immigration, that's how they're going to be able to expand past the base. If he's not able to do that, it's going to get more challenging.
And I'm sure there's some frustration that Kamala Harris and her campaign just gave him such low-hanging fruit for doing economic policies of things like stopping price gouging, stoking demand in the housing market. They could turn around and say to their base, look, this is what we told you to be worried about, that they're very liberal, that they're communist, to the point of that Washington Post op-ed. And instead, we're not getting that message from Trump.
Instead, and I'm wondering, Anne-Marie, and I'm curious from your vantage point, what further shakeups could happen in the Trump campaign when it's clear that there is some concern and there are a couple new advisors that just came in?
Yeah, they brought back people like Corey Lewandowski. Trump was asked about this yesterday. He said, no, I think my team is doing great, led by Susie Wiles, who's a lot of respect within the Republican Party. But to Josh Wingrove's point, when you're shaking up the campaign, it potentially feels like maybe messages are not landing.
Meanwhile, investors are looking to lower food prices as well as on the political front. This is one of the hot button issues. But this actually might be an area of easing inflation concerns. A Bloomberg commodity index for grains falling to a 4-year low as corn, soybeans, and wheat prices drop on the prospect of bumper crop harvests. Kona Hack of ED&F Man joins us now. Kona, great to hear from you. Thank you for being with us. I want to start with just kind of the reality of the data on the ground, what we're seeing with food inflation, especially as price gouging starts to become a very political hot potato. How much has food inflation come down even without a bumper crop season?
They have come down. We've come a long way since the Ukraine invasion, when prices reached historical high levels. I think that was natural because obviously Russia and Ukraine are massive exporters of grains. But what happened was that you saw exactly those high prices lead to an encouragement for farmers around the world to plant more. And that's what we're reaping now. We're seeing more acreage, more investment in their crops, and that's resulting in bumper harvests in Brazil, in the USA, in Europe. And now we're finally at a good, comfortable level of supply and inventories. The prices are finally coming down. So that's finally feeding through to the supermarkets.
What we're seeing is the likes of Kroger pledging $1 billion in price cuts in order to appease regulators in its tie-up with Albertsons. I'm just wondering how much this is trying to sort of smooth some of the political concerns and how much this is what we can expect from other companies as well, given the bumper crops and some of the other dynamics.
See, so there is definitely the price at the farm level. But then you have the whole supply chain. So you've got the freight, which actually remains pretty elevated. Then you've got the manufacturing costs of the refineries. So you've got the wages, you've got the remain pretty high. So by the time it actually gets to the retail level, some of those big cost reductions have actually dissipated a little bit. So that's why at the retail level, yes, for sure, they've come down from 2 years ago, but they're going to be pretty sticky at these levels. It's not going to be easy to bring further down from these levels. And for the average person who's buying bread or pasta, what used to be half the price only 4 years ago still feels pretty elevated. So there's a psychological impact here as well, because it's not coming down fast enough. It's kind of staying at these levels because they've all been passed on now.
And hence you get proposals like from the Vice President Harris saying that she wants to stop price gouging. I'm wondering if there is policy like that, how it affects, if at all, the production side of the chain.
So, yeah, so the whole supply chain is going to have to take a bit of a hit there. So farmers are incentivized to always produce maximum yields, maximum acreage, as long as their costs of production are being are being hit. So I think they will always try to produce the most. But then their buyers will have to then give them a decent level of compensation, and then the shippers and all of that. So who's going to take the hit? You can't afford for the farmers to take a hit, because then you're just going to end up in the same cycle where they're going to produce a lower crop the following year, and you're going to end up with a whole cycle of low crops and tight supply-demand balances. So it's a tricky one. It's simple to say in theory, but actually in the supply chain, you need to realize who's going to take the hit. And for me, that's really not very clear cut. And I definitely think the farmers would not be happy if they were to take any cut, because today, the average US farmer, the price today is very close to their cost of production.
If I can just add another variable into this. China demand, just in terms of the consumer, has continually been weak. They're having issues. They're stimulating purchases. And I just wonder, when we think about changing Chinese tastes and as well as weaker demand, how that fits into the overall picture of soft commodities at the moment.
So China, in the last 2 decades, was accounting for about a third of all the growth in agricultural commodity demand. The latest FAO forecast suggests that percentage increase is now going to fall to less than a quarter, less 15% in fact. So that's a huge decline. Why? It's because China's population is decelerating. It's slowing, in fact. There's not enough youth. That means consumption for meat, grains, restaurants, beverages, all of that is now slowing at a fairly alarming rate, to be honest. The only reason that they're still growing, if you like, is because they're so big in terms of absolute population, but that population growth is slowing. So we cannot rely on China as much as we did in the past. They are obviously very keen on proteins, so to the extent that some of these grains go and feed into animal, that will definitely continue to grow. But we now have to look at of South Asia and Southeast Asia for more demand growth. And I think China is there. They will continue to be there and trying to mop up any grains that they can at cheap levels. But I don't think we can rely on them on the kind of double-digit growth that we used to see in the past.
Kona, speaking of China, American farmers were in the middle of Trump's trade war, and now Trump is talking about 60% tariffs of imports coming from China if he is elected. Likely that would mean retaliation from Beijing. How much could that undermine American crops?
That's a huge, huge topic. And to a certain extent, the fact that China bought a fair amount this year is in anticipation of these tariffs coming in at the end of the year. So I think China is definitely stockpiling. Yes, prices are cheap, so China is doing the right thing by buying it where they're cheap, but they're definitely front-tailing the fact that there are potential tariffs ahead. So they will be looking to buy what they can now, and they're going to switch to other origins like Brazil or Russia eventually for a lot of their food needs. So for the US farmer, that is a question. That is an issue, and I think they're going to have to diversify and look for alternative outlets, because China is no longer. It's not going to be economically profitable for China to be importing at 60% plus tariffs. So they're going to have to look for alternatives for sure.
Kona Hawk of ED&F Man, thank you so much for being with us. Really appreciate it. Have a wonderful weekend. I will just say, so we're going to be focusing on politics next week. We're also going to be focusing on Jackson Hole and the latest out of the Fed. Bill Dudley, the former New York Fed president, just put out this piece on Bloomberg Opinion where he talked about 5 questions that he would like to see addressed in Fed Chair Jay Powell's speech, including Should monetary policy be more preemptive? Should it try to get ahead of cycles, as well as should the inflation target be higher? You probably will be disappointed. We probably won't get any answers to those questions. But Danny, in particular about monetary policy being more preemptive, that's essentially what people are betting on right now in terms of market pricing.
But it's also a criticism that people have had of the Fed, that they don't have this framework, that they're not reading what the data might be in months to come. Instead, they're just being reactive on backwards-looking data. So we are all hopeful that the Fed will do this, that they'll have preemptive rate cuts, because after all, that is better than having to react to things. And that is some of the flavor you've gotten from recent Fed speak. Goolsbee said something along those lines, that we don't want to be too late. But generally, this has not been the Fed's framework. It has been data dependence, which often means you're reacting to data, again, that is backward-looking.
And another question that he has out there is, should the Fed change the inflation target to a range? Some of these questions are going to be really key. We probably won't get answers, but we'll keep asking them. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Hackes. Yahira.
Hi, Lisa. UK retail sales bouncing back in July. Sales rose 0.5% after a revised drop of 0.9% in June. Summer discounts and the Euro 2024 football tournament helped to drive spending. Retail sales are still below where they were before the pandemic started in early 2020. More on that Kroger story Lisa mentioned. The company is planning to slash grocery prices by $1 billion if its merger with Albertsons goes through. That's double what it previously pledged to cut at Albertsons stores. Kroger agreed to acquire its rival Albertsons in October 2022. The nearly $25 billion merger is an effort by Kroger to compete against the likes of Amazon and Walmart. And Resorts World Las Vegas has been accused of catering to individuals with ties to organized crime. The Nevada Gaming Control Board has filed a complaint alleging that the property welcomes certain people with suspected or actual ties to illegal bookmaking and histories of federal felony convictions. Resorts World is owned by Malaysia-based Genting Group. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, swing state economics.
What I'm expecting to hear, Lisa, and hoping to hear, is that her agenda around the economy is going to be about opportunity. That, in fact, she understands that America is the land of opportunity and it gives everyone a chance to do the most.
That's coming up next, heading into the DNC next week. This is Bloomberg.
Artificial intelligence. Is artificial intelligence going to enable you and others to say we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
trying to make it a 7th straight day of gains after the biggest 6-day rally going back to November 2022. Good morning, welcome back. This is a very different morning than a week ago where we were looking at turmoil that we had not seen since the height of the pandemic. That is gone. Right now there is calm pretty much across the board, in particular in crude as people reassess just how much geopolitical risks will weigh in. Under surveillance this morning, heading over to the DNC's swing state economics.
What I'm expecting to hear, Lisa, and hoping to hear, is that her agenda around the economy is going to be about opportunity. That in fact she understands that America is the land of opportunity and it gives everyone a chance to do the most. And that is exactly what drives this economy, what makes our capitalistic economy so strong. At the same time that I expect her to continue most of the policies of the Biden-Harris administration.
Here's the latest. Kamala Harris set to pitch her economic agenda in North Carolina this afternoon ahead of the DNC next week. Harris and Donald Trump both looking to put the economy front and center. Noel Dixon of State Street Global Markets warning, quote, this could turn out to be a race to the bottom as it relates to fiscal irresponsibility. I think it's difficult to see how there is not a floor under the long end of the U.S. curve regardless of who wins. Make bond auctions great again. Noel joins us again now. Noel, thank you so much for being with us.
Sure.
I want to start there.
Yeah.
It seems like people have forgotten about this storyline, and it seems like it only gets reprised when there isn't a lot of other types of drama in the market. Why is it not just a convenient boogeyman to pull out when people don't seem to have that many worries?
Yeah, I feel like, right now the market is certainly focused on different elements that it's a lot coming at once. And I think right now the main focus is, or the concern is, both candidates seem to be wanting to embrace or add to the fiscal spending tab. And that is what I think most people are going to be focused on and keeping an eye out on. And it gives them trepidation about going fully into the bond market, especially into the long end. So from what we experience, it seems people are more focused on more the belly of the curve, staying on the short end of things. Because there's just a lot of uncertainty, and we're certainly going to get, I think, a risk premium baked in as we get into or approach the election.
Noel, when it comes to some of this rhetoric that's being thrown around, Kamala Harris today is going to talk about $25,000 if you're a new home buyer. Of course, you need Congress. So it feels like rhetoric, but Trump tax cuts are back in play. He's talking about a lower, his words, lower class, middle class, upper class tax cut across the board. Is anyone in these parties serious about ratcheting back fiscal spending?
I don't think so. I think right now, we've been able to sustain these high levels of debt, and they think, the music will continue to play. But I think, we're at a very different starting point. And this is what I think markets and investors are starting to get concerned about. We see it with some of the activity. And like I mentioned before, I think a lot of this risk is going to start to get baked in post-Labor Day. And I think we could expect some volatility.
To borrow a phrase from Lisa, do you expect